So, guys, we are like very good morning to all of you present here. Just confirm me with the audio video. Is it was audible? Am I visible? Just confirm me with the audio and video. So, guys, we are like audio video seems perfect. Okay. Okay, Ji. So, hello everybody, and welcome to the CA Final Direct Taxes and International Taxation Full English Live Power Batch. A very, very, very warm good morning to all of you present here. How you all are doing. Please let me know in the comment section so that we can start off with today's session. We have with us till now Deepak, Bhuvana, Krishna, Kavya, then Kavi, Kamal, and many other people joining side by side. Now, sir, we started off with chapter capital gain. In first lecture, we started off with some basics. In last lecture, we continued those basics. Let us take a moment to first of all recall what we have studied till yesterday. Not just yesterday, but till yesterday, whatever we have studied. Let us have a uh, let us have a recap of those topics. Done, sir. Doing great. Should we? Are you going to participate? Yes, sir. We are going to participate. Whenever we do a recap, it is a recap for you all, not just me. So the more you will try to participate in these type of recaps, the more holistic image of the entire chapter will come to your brain. Done, sir. We started from income from capital gain, where we understood the charging section, which says any gain arising from transfer of capital asset shall be taxable under that capital gain in the year in which transfer took place. In that, we have definition of capital asset, which implies any unit linked insurance plan is a capital asset. Then we said any securities held by FIIs or AIFs is also capital asset. At last, we called every other asset as a capital asset. But stock in trade has to be removed. Any kind of movable personal assets are to be removed. Any kind of rural agricultural land is to be removed. Any kind of gold monetization bonds are to be removed. But any kind of drawing, painting, sculpture, archaeological collection, any other form of art, virtual digital asset bullions are not to be removed. These are always capital assets. Then we came on to what is a rural agricultural land. We understood that if area is covered by municipality or municipal corporation, it shall always be urban area. But if population is more than 10,000 up to 1 lakh, then 2 kilometers beyond area shall also be urban. If population is more than 1 lakh up to 10 lakh, then area beyond 6 kilometers area shall also be urban. If population is more than 10 lakh, then 8 kilometers area beyond the municipal limits shall also be urban. Beyond that, everything is rural. So area which is not urban is always rural. Then we came on to definition of transfer, which says any kind of sale, any kind of exchange, any kind of relinquishment, any kind of extinguishment of an assets, any kind of conversion of capital asset into stock in trade, any kind of compulsory acquisition, any kind of transfer of immovable property in part performance of the contract, any transaction which enables us the enjoyment of immovable property, and any redemption of zero coupon bond is transfer, whether done directly, indirectly, conditionally, unconditionally, everything shall amount to transfer. Then we came on to type of capital asset, where we understood long-term capital asset or short-term capital assets. If four assets are held for more than 1 year, they shall be considered as long-term, else they shall be short-term. What are those four assets? First of all, listed equity shares or listed listed securities on recognized stock exchange. Then we had units of equity oriented mutual funds. Then we had units of UTI, and at last we had zero coupon bonds. These are to be held for 1 year. They shall become long term. Second, we have any other asset for which we have to hold them at least for 2 years. They will become long term, else they shall become short term. After that, we came on to the computation portion where we understood the format. Full value of consideration minus transfer expenses will give us the net consideration. We have to reduce cost of acquisition, cost of improvement will give us capital gain. We have to reduce the exemptions, and last, we have to tax it under the different tax rates. In this entire process, first thing we need to understand is full value of consideration, where we understood money received or receivable is full value of consideration. But there are three important cases in this. First of all, when you sell immovable property. If you sell immovable property now, you require stamp duty value as well and consideration multiplied by 110%. Okay. In this case, if SDV exceeds, then SDV shall be taken as full value of consideration. But if 110% of consideration is more, then actual consideration shall be taken as full value of consideration. Sir, but what if we are not satisfied with SDV? Then you might go to valuation officer. He might increase the SDV. He might decrease the SDV. If he increases, you might ignore him. If he decreases the SDV, take the reduced SDV. Sir, which SDV to be taken? Registration date, agreement date. Lawmaker says the date on which you received money via account paycheck, that SDV you have to take. Then we came on to 50 CA, which talks about if you sell any unlisted shares. Then sales price or FME, whichever is higher, you have to take. But if company's board of director have been suspended, then these provisions are not applicable. At last, any asset you are selling for which sales price is not determinable, then in that case you shall take fair market value as full value of consideration. Then very important, we came on to cost of acquisition. Cost of acquisition, we understood price paid to acquire the asset, any direct expenses incurred, any expenses incurred to obtain clear title of the asset. But what not to include. STT never add. Any asset, any expense for which deduction is already taken, do not add that. Then we came on to special cases. We got asset free of cost, take the cost of acquisition of the previous owner. We got any intangible asset. Lawmaker says that if you have bought that intangible asset, then take the purchase price. If you have self-generated, take nil. For example, asset is very old prior to 1st April 2001, then take the FME as on 1st April 2001. What if you have depreciable assets? Lawmaker says take WDV. What about bonus shares? Lawmaker says by default the bonus is nil. But if bonus are very old now, then you can take 1st April 2001, or if bonus are relatively old, then you can also take 31st Jan 2018 FME if shares are listed. Right, what about right shares? So price paid to acquire the asset holds good in right also, but in this case, whatever money you received on renouncement, that shall be your short-term capital gain. In addition to that, if somebody purchases these renounced shares, for him cost of acquisition would be price paid to company plus price paid to the renouncer. Then we had ESOPs. Lawmaker says that if any ESOPs have been purchased, then FMV on the date of exercising the option shall become your cost of acquisition. Then we took a lot of time to understand the demerger, where we understood that percentage of net assets transferred to the resulting company shall also transfer the share price of the resulting company. That is what we had understood in this topic. Then we came on to special cases, where we started off with a very special case called ULIP taxation. We had two types of things. If you have any ULIP in which annual premium exceeds more than 10% of the sum assured, in that case it will be taxed under capital gain. But sir, what about if it is less than 10%? Lawmaker says if it is less than 10%, now to 1st Feb 2021, any ULIP issue has been exempt. But beyond that, it should be up to 10% as well, and it should be up to 2,50,000 as well. If it fulfills, then it shall be exempt. If it exceeds 2,50,000 rupees, then it shall be taxed under that capital gain. Similarly, LIP. To 1st April 2023, any LIP which is up to 10% was exempt, but after 1st April 2023, LIPs up to 5 lakh will be exempt. Beyond that, it will be taxable under IFOS. LIP under IFOS, ULIP under capital gain. We took example for this. Then we came on to topic called slump sale. We said that if you transfer any unit or a business as a whole without assigning value to a single asset, then it is called slump sale. Now, important here is we need three things. First of all is FME1, FMB2, and cost of acquisition. FME1. FME1, try participating with me. Every asset transferred as FMV of the assets transferred. How do we compute FME1? If you have building, take SDV. If you have shares, take fair market value. If you have gold, then take open market value. If you have any other assets, take book value. Reduced liability will give us the FMV1. Then we have FMV2. Assets received. If you receive money, take money. If you receive shares, take fair market value. If you receive jewelry, take open market value. If you receive any other assets like building, take SDV. This is the FMV2. Whichever is higher will give you full value of consideration. Reduce cost of acquisition. How do we reduce cost of acquisition? Lawmaker says cost of acquisition imply the unit transferred as the unit transferred's balance sheet to be referred. In that case, whatever depreciable assets we have, take WDV. Whatever other assets do we have to take book value. In this entire process, any revaluation done has to be taken off. Impact of revaluation has to be nullified in all these cases. This will give you the capital gain if unit has been held for 3 years or more. Then in that case, more than 3 years, then it shall be long term. If it is held for less than 3 years, it shall become short term. Then we came on to another important topic, which was section 50AA. It talks about if you have three securities, which is market linked debentures, any debentures on which interest is dependent upon underlying asset, underlying securities. Or if you have any specified mutual fund, any mutual fund which are issued after 1st April 2023, and up to 35% of its proceeds are invested in equity shares. Or if you have unlisted bonds and debentures which are not listed on recognized stock exchange, of course, if these three securities are transferred, your capital gain will always be short term, your assets would also be short term. Then we have transfer of demat securities. If you have multiple securities in demat, any transfer of those securities would render you capital gain, but cost of acquisition of those securities would be taken on the basis of FIFO method. At last, we came on to advance money forfeiture. If you forfeited money on the property being transferred, then in that case, it is taxed under IFRS after Modi government coming into picture. Before Modi government, that is before 1st April 2014, what was the case? Any advance money forfeited has to be reduced from cost of acquisition. But there was a special case. If we forfeit and we only transfer the property, then only this reduction will take place. Otherwise, if I forfeit and I gift it to somebody and that other person is going to transfer in future, now in that case we don't have to reduce this. I hope things you are able to correlate all the things, you are able to understand these things. These were the special cases. Good morning, sir. Good morning. Doing great, doing great. Were you able to recall? Sir, we are going to ask you personally. Don't be teacher here. Just ask, just tell us about this, about friends. Are you really going to revise? Are we going to really revise this way regularly? I'm saying mostly. Not regularly, but mostly we are going to revise in this manner only. Why am I saying that? Because the chapters like capital gain, the chapters like PGP, the chapters like NR taxation are relatively big, where revision on regular basis is important. But chapter like IFOS, for example, it will be done in a single day. So we might not require multiple revisions for them. Once we are done, we shall not revise it next day. So sir, in power patches also you are going to revise. Yes, 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 yes. Power patches are what is power patch? I power you in whatever way in whatever way power is transmitted, even after revision also. Now, are you all awake? Just tell me, are you all awake? Because I want to pick up a concept which is really important and which really is going to take some amount of our time. But since it is morning, I personally think that everybody is energetic on this time. You all can participate. Yes, sir, we are energetic. We cannot be more energetic. You don't have to write this. This topic, personally, I don't think you require writing. Whatever example, it is just an example I'll be taking. Similar example is there in the book as well. Okay. Topic is transfer of capital asset from partnership firm to partner or partner to partnership firm. Both the cases we have to discuss one by one going forward. First of all, if partner transfers any asset to firm, if partner transfers any asset to the firm, it is but obvious that any gain, any profit would arise in the hands of the partner. So capital gain would be applicable in the hands of the partner. How capital gain would be calculated, sir? Full value of consideration shall be calculated based on amount recorded in books of accounts by firm minus cost of acquisition, actual cost we will take, and this will give us the capital gain. This is section 45.3 and we are done with this portion. Wow. Wow. If partner transfers any asset to the firm, then this is how we are going to compute the capital gain. Capital gain would be computed in the hands of the partner Full value of consideration shall be taken as the amount recorded by the partnership firm in their books of accounts. Fair enough? Simple enough. Sir, what about firm transfers any asset to partner? Firm might also transfer. But sir, in what conditions firm transfer? Whether are they going to transfer in case of reconstitution, constitution? Are they going to transfer at the time of dissolution or normally? Lawmaker says normally we don't have any provisions. Normally there is no tax treatment. But in case of reconstitution and in case of dissolution, we have several sections. Under dissolution, a section called Section 9B comes into picture, whereas in case of reconstitution, 9B plus Section 45(4) both come into picture. What these sections says, I am yet to discuss. But basic fundamental is this only, that a partnership firm transfers any asset to partners, normal course of business, no treatment. But in case of dissolution, in case of reconstitution, two sections come into picture. In case of dissolution, 9B comes into picture. In case of reconstitution, 9B plus 45(4) both come into picture. Just confirm me, holistic idea is clear or not? Which section apply in what cases? I am yet to discuss the sections. Now, one thing, a clear premise before starting this section. This section is this section has been considered relatively difficult by some segment of the students. Why? I'm not sure. Why? I'm not sure. After we are done, just tell me why it is considered difficult. I don't know. I have never experienced, but relatively when students hear, before hearing from me, they consider it relatively tough. So I want one participation. Whatever I say, if you agree to me, automatically write clear from your end, so that I am aware that you know these things. Otherwise, I might have to wait that whether you understood or not, whether it is clear to you or not. Before me asking you, just yourself answer those things. Okay, one thing, active participation. You had promised on day first. This is where I require your participation, because multiple number of times, instead of me asking you, yourself say that it is clear to you or not. Okay, so just type the word clear and continuously start sending it again and again. Okay, once we proceed with the topic. Let us take an example to illustrate what do I actually mean. There is a partnership firm called AB and Rahul. AB and Rahul is a partnership firm. Balance sheet is as follows. A's capital 2 CR, B's capital 2 crores, and Rahul's capital 2 crore. And they had assets called land appearing 2 crore, whose market value was 4 crore. They had shares 2.5 crore, fair market value 3.5 crore. Other assets 1.5 crore, fair market value 2.5 crore. If I tally the balance sheet is simple. This is a normal partnership firm given to you. In this partnership, one condition, one point is given, that Rahul has retired on 1st April 2025, and in settlement of his dues, he has been given land that is appearing at 2 crore rupees. This is the statement given to you. Simple statement. Now, it looks very simple from outside that capital due was 2 crore rupees only, and to settle him, land which is appearing worth of 2 crore rupees has been given to him. It seems very fair now. It seems very fair. But it's not that fair. There is a lady. There is a lady, this is the Kanun of this country. This is the Kanun of this country. What she says, she says, she says, wait, before doing anything, wait for a sec, wait for a second. What she says, you are transferring this land to Rahul. Just for a second, assume that if this land was sold to an outsider, how much capital gain would have arisen in the hands of firm? Did you understand one line? If this land was sold to an outsider, how much capital gain would have arisen? Let's try. Assuming that this land was sold to an outsider, then full value of consideration would have been 4 crore, because market value 4 crore means this land could easily fetch 4 crore. For a firm, cost of acquisition would be 2 crores. Yes. For a firm, cost of acquisition would be 2 crore. Capital gain would be 2 crore rupees. And on this, firm might have been paying taxes at the rate of 12.5% plus surcharge of 12%. This is the treatment which was supposed to be happening in the books of firm. Okay, if this land would have been sold to an outsider, so 2 crore into 12.5% into 1.12 into 1.04. So all in all, plus 4% education cess is also to be added. 29,12,000 is the amount of taxes firm was required to pay. See, Nimotai had a reasonable basis. This is nothing but section 9B. That's it. This is section 9B. If partnership firm gives any asset to the partners, assume he is not a partner. If he was an outsider, then whatever capital gain would have been arising in the hands of the firm, pay that capital gain. That's the same thing. Section 14, section 9B is very clear. Very clear. If you have a piece of laddu and you give this to brother, don't assume it he's your brother. If you would have been giving this to somebody outside, if some outsider would have fetched you 100 rupees, then your brother should also give you 100 rupees. That's the same concept. If this land has been given, Puneet Sharma Sarati morning lecture, yes, anything can happen. Anything can happen anytime. Now, what the point is? What the point is? If asset has been given to a partner now, assume he is not a partner. If he would have been an outsider, then whatever capital gain arising, you have to pay that capital gain. This is what section 9 says. Now, just mention this. Is this concept clear? Is it logical? Not even clear. Just is it logical enough that if asset is being given to a partner, why are we assuming him to be a partner? Assume him to be an outsider, because if asset would have been sold to an outsider, then firm would have had capital gain, certain capital gain, and that capital gain was taxable, so that tax should have been paid. This is logical now. Sir, it is logical. It is very logical. It is very, very logical. This is section 9B. That is all about 9. That is all about 9B. Now, Nimotai takes you to a imaginary world. Nimotai, you understand, our finance minister, our beloved finance minister, that cute lady, that kuchu lady. Nimotai takes you to her imaginary fairyland. What she wants us to think. Listen up, listen. Now, Nimotai wants you to continue imagining. For example, this was the balance sheet. 2 crore was the capital, and land was appearing in 2 crore, and market value was 4 crore. Nimotai wants to continue to your land. Now, what? No, continue in your imagination. She says, assume if this land was sold to an outsider only. Do not assume him to be a partner. If this land would have been sold to an outsider, how your books of accounts would have changed. How your books of accounts would have changed. Listen, if this land was sold to an outsider, then full value of consideration firm would have received 4 crore. This 4 crore would have been bank balance. This 4 crore would have come to your bank account. Yes. Cost of acquisition was 2 crore. Capital gain was 2 crore. Since we had capital gain, every partner's capital would have increased. Rahul's capital would have also increased now. Every partner's capital would have increased. Yes, yes, yes. Arey Baba, if firm earns any profit, so this profit would go to partners only now. So if we have a capital gain of 2 crore rupees, then every partner's capital would increase. How much capital would increase? Divided by 3, assuming equal profit sharing ratio, 67 lakh would be added to each partner's capital. Because if this land would have been sold to an outsider, firm would have had 2 crore worth of profit. And each partner would have got 67 lakh rupees worth of profit. So add this to Rahul's capital. Because since profit is being added to partner's capital, taxes would also be charged to partner's capital. Assume taxes are 30 lakh rupees. We calculated 29.12. Assume it is 30 lakh rupees. Assume it is 30 lakh rupees. Taxes would also be reduced from the partner. 10 lakh rupees divided by 3, 30 lakh divided by 3, that is 10 lakh rupees. That means Rahul's capital would have been 22.56 crore. Now, how do we read this? If this asset was sold to an outsider, we could have had simply 4 crore in our bank account. Every partner would have had 67 lakh of profit. Every partner would have paid 10 lakh worth of taxes, and every partner would have had 2.57 crore worth of capital if this land was sold to an outsider. Are you able to process what I am saying? Yes or no? Are you able to process what I am saying? Nimotai wants you to imagine something in the way you imagine in fairyland. Don't assume it has been given to a partner. Don't assume. First of all, it has been sold to an outsider. It has been sold to an outsider. Yes, sir, we are understanding. If this would have been sold to an outsider, whatever capital gain is arising, just pay that. And if this would have been sold to an outsider, we would have had 4 crore in our bank account. And every partner would have had 67 lakh of profit. Every partner would have paid 10 lakh of taxes. That means every partner would have had 2.56 crore of 2.57 crore of capital. Sir, we understood. Now there is another question mark. Why? What's the question mark? Very carefully listen. Assume if this asset is sold to an outsider, then we would have had 4 crore worth of bank account. We could have simply paid partners worth rupees 2.57 crore directly in cash. If this asset would have been sold to an outsider, every partner was required to pay 2.57 crore only. This is what the interpretation comes out now. If we are not giving this land to a partner, we are selling it outside. If we just want to clear the dues of the partner, we could have simply sold this asset to an outsider. We could have simply had 4 crore in our bank account. We had 4 crore in bank account and we are just required to pay 2.57 crore rupees to our partner. Why did we give him 4 crore worth of land? Why did we give him? If he was just required to be paid 2.57 crore for every settlement, why did we give him the land worth 4 crore rupees? There is some benefit that partner must have given to you. There is some capital benefit that partner must have been giving to you. Therefore, this capital benefit of 1.43 crore, difference between the two, is nothing but section 45(4). Again. What section says? What this section says? Section is very clear. Section says, assume you are not giving it to a partner. Assume you are not giving it to partner. Then you must have had 4 crore rupees in your bank account. 4 crore in your bank account you must have had. 4 crore you must be having. Every partner was required to pay 2.57 crore because profit to be added, taxes to be reduced. In that case, every partner would have had 2.57 crore. You could have simply taken out 2.57 crore out of your cash balance and paid to partner. Then how dare you pay him 4 crore rupees worth of land? How dare? Because you have given him the entire land now. If you have given the entire land to him only now. So you have overpaid this partner. Why you have overpaid this partner? Because there must be some benefit you might have got from this partner. And that benefit is being taxed here. Benefit is fully taxed here under 45.4. Did you understand 45.4? Did you understand 45.4? In one case, we are saying that if this is was sold to an outsider, whatever capital gain arises, pay that. Second thing, we are taxing whatever overpayment of capital we are doing. Whatever outstanding capital was due, we are overpaying that capital. That overpayment is nothing but 45.4. Are you able to process that? Sir, we are able to process that. We are able to process that. But, sir, there is something very wrong. I mean, our heart is not able to digest because we are giving land only once. We are giving land only once, but they are taxing us twice. First of all, they want you to pay taxes under 9B on the fact that land is sold to an outsider. We are okay with this. We are okay with this. We are okay with this. Even this seems logical that if land would have been sold to an outsider, we would have had 4 crore worth of cash. But partner was due just a 2.57. Instead of 2.757 cash payment, we gave him 4 crore land. This also seems fair. But issue is no, sir, we are giving asset only once, but tax is being charged twice. We are giving asset only once, but tax is charged twice. Are you getting? Both the sections might coexist. We are taxed twice. One time we are being taxed on the basis that if we are selling it to outsider, pay taxes. Second time we are being taxed that we are overpaying his capital. Are Baba, transaction is one only na. Transaction is just one only na, but we are taxing the same transaction twice in two different angles. One angle is overpayment. The other angle is if we would have had sold to an outsider. Are Baba, what the sense? It is a senseless thing. But the point is, we are being taxed twice. How government tried to resolve this thing? Yes, sir, same doubt. Okay. Lawmaker says since we are being taxed twice, pay taxes twice. Pay taxes twice. This 9B is to be also paid by the firm. Pay. This 45.4 is also a capital gain. It is a capital gain amount. This is also to be paid. Taxes on this has to be paid. Taxes to be paid. Pay twice. You have to pay twice. But sir, we are not able to digest. How come? How come government is looting us? Government is plundering us. Everybody thought the same way. Like you, like me, everybody thought the same way. Therefore, government came up with a cope-up mechanism. Now, what the cope-up mechanism is, try understanding this. Whatever the capital gain arising under section 45.4, first of all, is to be paid. Is to be paid. The basic thing is that whatever capital gain is arising is to be paid. Basic thing is this only. Second thing that we have to do is you will get a benefit of it. Sir, you will get a benefit in future. Now, what benefit in future you are going to get? See, right now, whatever capital gain is being taxed in your hands, you will get a apportionment of these capital gains. Just write this thing if you are writing. If you are not writing, just listen to this thing. Capital gain under section 45.4 is reapportioned to other assets being revalued in ratio of revaluation. And such capital gain will be reduced when in future such other assets are sold. Be with me, be with me. You will understand what I actually mean. Understand? Okay. Now, this 1.43 crore is to be paid. That's first thing. What lawmaker says that right now pay this, but we will give benefit of this capital gain in future. Now, what benefit they are going to give? Lawmaker says find out what other assets are being revalued in your balance sheet. For example, we have shares which are appearing at 2.5 crore, but their market value is 3.5. Other assets are other assets can be cash, can be any other thing which are appearing at 1.5 crore. Their fair market value is 2.5 crore. Can I say shares are being revalued by 1 crore? Can I say other assets are also revalued by 1 crore? Right answer is yes. Both are being revalued by 1 crore. Sir, fair enough. Fair enough. Lawmaker says whatever capital gain was there, 1.43 crore. This is to be revalued in other shares being revalued. This is to be reapportioned to other shares being revalued. For example, shares appearing in books for 2.5 crore. Market value 3.5 crore. Other assets, books of accounts 1.5 crore. Market value 2.5 crore. Revaluation done is 1 crore here. Revaluation done here is 1 crore. So in 1:1 ratio, this capital gain would be apportioned to both of them. How much it would turn out to be? 1.43 divided by 2. Sir, 71.5 lakh would be apportioned here and 71.5 lakh would be apportioned here. Sir, why we are apportioning the same? Now listen, when in future you will sell these shares, for example, in future you would sell these shares for 4 crore. Assume you would sell these shares for 4 crore. What would be your cost of acquisition? Sir, your cost of acquisition would be 2.5 minus the capital gain already being taxed, because this capital gain is already taxed now. This capital gain is already taxed under 45 for once. So this will reduce your capital gain in future. This will reduce, and your final taxable capital gain would be 4 minus 2.5 minus 0.715. This will be 78 lakh point 50,000 would be your capital gain in future. This is the entire 45, 4 and 9 we summarized to you all. What the entire point is, try understanding. I will take another example to illustrate you. Don't worry. I know whenever you hear first time, no, it's just a recollection of thoughts. But when we'll understand it second time, you will understand everything. Now, what the point is, whenever any asset is given by partnership firm to a partner, assume if it is sold to an outsider, whatever capital gain arises would be taxed in your hands. That is section 9B. Section 9B continues. Section 9B, oh sorry, section 45(4) here says that if this land is sold to an outsider, then whatever capital account arises over and above that capital account, whatever payment we are doing, that is taxed under 45(4). Overpayment of capital is 45(4), but since twice taxed, so lawmakers give you a benefit. Whatever tax you pay under 45(4, now whatever capital gain arises in 45(4, you are given benefit of such capital gain in future. Whatever capital gain is being there now, you have to apportion this capital gain into various different assets. Whatever other assets that are being revalued, these assets are being revalued. Whatever revaluation take place now, in that revaluation ratio, you have to apportion this capital gain to different assets. Whenever you will reapportion them, this reapportioned capital gain will work as cost of acquisition in future. This reapportioned capital gain will reduce your capital gain in future. This is what the entire treatment would be. Understood or not? Did you understand this example or not? Very beautiful point. I mean, very logical. I mean, this cannot be more logical than this. Are you able to understand? Sir, morning. I mean, so much deep thinking in this morning. Are you are able to think this in morning, other are not able to process it any time of the day. Understood, sir. Understood. Arun Shriram. Oh, Arun, for the first time I'm seeing you. Hello. Deepak, sir, clear, sir, clear, clear. Understood. Oh, can I say I love you all? I mean, you are so good students, sir. At first, only you said I understood. If this would have been Hindi batch, then sir, please repeat. Sir, please repeat, repeat. I mean, Hindi students do ask this thing a lot. Don't say this to them, but they must have said repeat, repeat, repeat twice. Despite of knowing that I don't just end the topic once, I have to repeat it. I know it takes twice to get the topic done. Let me take another example to illustrate. And this time now, This time I am not going to teach you anything. I am just a visitor. I will be just briefing you the case and you have to solve it for me. Are you going to help? See, the more you participate, na, the more concept would be clear to you. The more you participate, the more clearer things would get for you. Okay? Let's try doing it once. Let's try once. This is an example. Either you have to lead. I will just brief you as to what to do. Okay? Done, sir. We'll do that. Mr. Prem is a partner in firm X and Company. Okay. Mr. Prem is a partner in X and Company, Mumbai. Has four partners, including Mr. Prem, who shares profit and losses equally. So X and Company has four partner A, 1, 2, 3, 4, and fourth is Mr. Prem. And everybody has share 1 is to 4. Sorry, 1 is to 4, no. 1/4 share everybody has. Done, sir. So, ठीक है. Mr. Prem resigned from X and Company. Mr. Prem resigned from X and Company. Okay, resigned means there is reconstitution happening. What is reconstitution? Addition of a partner, resignation of a partner, death of a partner. These are reconstitutions. On 1st April 2025. Okay, on 1st April he is resigning. On the said date, capital balance of each of the partners stood at 32 lakh rupees. So Prem's capital was 32 lakh rupees. Okay, listen now. In order to settle the dues of Mr. Prem, the firm revalues its land for the first time since purchases. The valuer also valued self-generated goodwill at 70 lakh rupees. The firm has the following capital asset whose details are given as follows. The firm has following capital assets. Now, how? They had a land at Pune, which was appearing for 15 lakh rupees, is now valued at 50 lakh rupees. Can I say there is a jump of 35 lakh? Sir, there is a jump of 35 lakh. They had a land at Nagpur appearing at 25.4. Now, this has to be revalued at 45 lakh rupees. That means, can I say there is a jump of 19.6 lakh? Sorry. They had a land at Mumbai appearing at 88 lakh rupees. Now appearing at 88, revalued at 250. That means 162 lakh is the jump. Self-generated goodwill 0 was appearing and they have recognized it now. So jump is 70 lakh rupees. Do we have to do this? I personally say no, we don't have to do this. But I am doing so that question is clear to you all. In April 2025, X and Company gave Nagpur land and 15 lakh rupees to Mr. Prem. Oh, this Nagpur land of 45 lakh has been given plus 15 lakh also given. Oh, 60 lakh rupees. Oh. Entire similar case. Whatever case we had taken an example, same case is here, but figures changed. Same case here, but figures changed. Now, what your thought should be? What your thought should be? First thing, Prem has been given a piece of land. Prem has been given a piece of land of 45 lakh rupees. What I had asked you to think, assume if this land was sold to an outsider. If this land was sold to an outsider, what would have been the capital gain in the hands of the firm? Try calculating it once. What would have been the capital gain in the hands of the firm? Try calculating. And what will be the tax amount in the hands of the firm? Try calculating of your own. Just waiting for you all. If this 45 lakh worth of Nagpur land has been sold to an outsider, what would have been the capital gain? Can I expect answer from you? Sir, if this land would have been sold to an outsider, our full value of consideration would have been 45 lakh. Our full value of consideration would have been 45 lakh. Our cost of acquisition, what would have been? Sir, cost of acquisition is appearing 25.4. That means our capital gain, if this land were sold to an outsider, was 19.6 lakh. This would have been our capital gain. And how much tax would be applicable? Sir, tax would be 12.5% plus 4%. 2,54,800. This is the capital gain tax applicable. This is the tax applicable. This is the same thing Section 9B says. Section 9B, full value of consideration minus cost of acquisition, LTCG, computation of tax liability 254,800. Very simple, the same thing that we did. Now, second step. If this were sold to an outsider, how partners' capital would have changed? How partners' capital would have changed? Try understanding. Each partner's capital was 32 lakh rupees. Each partner's capital was 32 lakh rupees, including Prem. If this land were sold to an outsider, 19.6 lakh would have been profit of each partner, total partner's firm capital divided by 4. That means Prem's share would have enhanced by this amount. 19 lakh 60,000 divided by 4. 4 lakh 90,000 would have been every partner's profit. Yes, every partner's profit. 2,54,800 was taxes amount. So every partner was required to pay this much amount of taxes. The same amount. Am I? Yes, 254,500. 800 divided by 4. 63,700 would have been the taxes amount. So how much each partner's capital would be? 32 lakh plus 490 minus 63,700. Each partner's capital would have been 36, 26, 300. 36, 26, 300. Each partner's capital would have been 36, 26, 300 if this land were sold to an outsider. If this land were sold to an outsider, each partner's capital would have been 36, 26, 36 to 26, 300. Yes. Yes, 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 yes. If this land were sold to an outsider, each partner's capital would have been 36, 26 to 300. Yes. If this is so, why this bloody person is being paid 60 lakh rupees? Why this person is paid 60 lakh rupees? Because you must have got some benefit from him. Why he is being paid? Why is being paid that more? Why is being paid more? Sir, because you must have got some benefit from the partner. Therefore, 23 lakh, 73,700, whatever excess repayment you are doing, whatever excessive repayment you are doing, that is tax in your hands. This is again tax under 45(4). This is again tax under 45(4). But sir, why double taxation happening? Double taxation is happening, na sir? How can, I mean, we understand, sir, your logic that sold to an outsider pay tax, overpayment of capital pay tax. Arey, but we are giving him land only once, so why double taxation happening? Okay. This is external. Lawmaker says whatever other assets are there, this asset has been given. Other assets are land at Pune, land at Mumbai, and goodwill. We have three other assets. One asset is being revalued at 35 lakh, the other is 162, and the other is 70 lakh rupees. So their revaluation ratio is 35, 62, and 70. This is the revaluation ratio. Lawmaker says whatever excess capital, whatever excess tax capital gain you are incurring in 45(4), this capital gain is to be reapportioned in these assets. 35 is to 162 is to 70 ratio. Same reapportionment they are doing. See, 23, 73, 700 multiplied by 37 divided by 267. 23, 73, 700 multiplied by 162 divided by 237. In the same ratio, they are apportioning. Whatever the capital gain attribution is there, this will act as a cost of acquisition in future. What will happen, for example, this Pune land, Pune wala land, listen to this. If this 15 lakh land appearing in 50 lakh rupees is now sold in future for 75 lakh, how capital gain would arise? See, 75 lakh is the sales value, 15 lakh was the cost. Whatever earlier attributed capital gain was there, now this will also be reduced, and this will give you long-term capital gain. So your long-term capital gain in future would reduce. Long-term capital gain in future would reduce. So very nice, very logical. Now it seems logical because whatever extra capital gain you are paying in 45(4) is distributed to different assets. The bigger the distribution would be, the easier for you to get that thing done. the bigger distribution it would be. Sir, cost of self-generated goodwill would be zero. Yes, zero. Cost of self-generated goodwill is always zero. Did you understand the logic and did you understand the provision? Sir, we understood, but still there is a friction. Again, understand. Let's read it with the context, the concepts that we have given in the book. Now, everybody who missed the boat till now, just to try understanding this. Just try understanding this. Section 45.3. Any partner giving any asset. Partner giving any asset to the firm, then sir, in the hands of the partner, capital gain would arise. Full value of consideration will be amount recorded in the books of the firm. That's simple. 45.3 is very simple. But sir, what if firm gives me any asset? Then what would happen? Firm would be giving any asset. So two sections would arise. First of all is 9B and second is 45.4. In what situations assets are being given? If assets are distributed on dissolution or reconstitution of the firm. In case of capital asset or stock. Acha, section 9B na, in case of dissolution, na, for example, instead of land, for example, instead of partnership firm giving any land, some stock is given to a partner. So lawmaker says in that case, PGPP would arise. If partnership firm any pays any land, pays any pays any stock to partner at the time of reconstitution, at the time of dissolution, lawmaker says in that case PGPP would arise. So if asset is given, then capital gain would arise. If stock is given, then PGPP would arise. Okay? Is distributed by the partnership firm to the partners in connection with reconstitution, dissolution, then such distribution shall be deemed to be transferred in the firm and firm is required to pay tax under capital gain, PGPP or both. So partnership firm giving any asset to the partner, assume it to be sold to an outsider. If by selling that asset to an outsider you would have capital gain, then pay capital gain taxes. If you would have had PGPP, pay PGPP. Money distributed is not taxable under 9B. It's logical because if you are selling to outsider, why would we be selling money? Why would be selling money? Now, when a partner receives any money and capital asset in connection with the reconstitution, then profit arising from receipt of such shall be chargeable to tax in the previous year in which asset is received by the partner. So, partnership firm giving any asset to the partner, assume sold to an outsider, you need to calculate the book value of the partner's capital account. How capital account would be calculated? Capital before reconstitution, assets FMV minus cost. So whatever benefit you have got minus whatever taxes you have paid, this has to be attributed to different partners and this would give you capital gain after reconstitution. Over and above whatever assets you are distributing to him, this would be reduced and this will give you your capital gain. So overpayment of capital would be taxed here. Now issue here is, since overpayment of tax is there, this capital gain would be apportioned to different assets. Okay? In what ratio it is being apportioned, that is not relevant, but apportionment has to be there and that apportionment will act as cost of acquisition in future. Deepak says, sir, cost of acquisition of goodwill is zero. Yes, self-generated goodwill is by default zero, but since it is an apportionment now, so we take it as it is. See, ideally, cost of acquisition is goodwill. Self-generated goodwill should be nil. But that is just acquisition. Apportionment is not cost of acquisition. It works as a cost of acquisition. It is me who is telling you it is called cost of acquisition. But legally, lawmakers do not use this word as cost of acquisition. They called it attribution. And attribution can be taken as a deduction from capital gain in future. So this is me who is telling you this works as cost of acquisition to simplify these things for you. But that doesn't mean actually it is called cost of acquisition. It is attribution of capital gain, by which your capital gain would reduce in future. That is what it means. Did you understand? Did you understand 45, 4 and 9B? Now, we understood how partnership firm gives any asset to the partner and it is being taxed at the time of reconstitution or dissolution. But sir, what about if AOP gives any asset to the members? What if AOP gives any members or two assets, or BOI gives any assets to the members, or AJP gives artificial juridical person gives any asset to the members at the time of reconstitution? So what if it happens? Lawmaker says in all the three cases, if AOP gives any assets, If BOI gives any assets to the members, all the provisions of 4549B shall apply. Mutatis mutandis. Mutatis mutandis means as it is going to apply. These provisions are going to apply as it is. Done, G? Yes, G. Yes, G. Yes, G. Yes, yes. Done, sir? Yes, sir. Done, sir? Yes, sir. Done, sir? Yes, sir. This liquidation taxation we can better do with IFOS if you want. Sir, nahi, right now you tell. We want to understand. We are excited about the first topic. Now we want to understand liquidation also. And this liquidation is a bit technical, a bit technical. Before studying IFOS, if you want, I can teach you right now. If you want, then we can study it with IFOS as well. This liquidation should be studied with IFOS for better understanding. But if you want to understand right now and including the technicalities, I can teach you that as well because you seem to be very interesting. Since the first topic was very interesting for you all, second topic can be also interesting. Should we study liquidation right now or after IFOS? You just tell me. I'll be waiting for you. Sir, with IFOS only, that's okay. That's okay with IFOS only. We don't have to study these things advance after IFOS. Understand one thing, I'm not teaching you anything. Liquidation, how liquidation is understood. Understand, huh? Whenever you hold a capital asset, or I should say, whenever you hold shares in a company, whenever you hold shares in a company, and that company liquidates, it's like you had rights in the shares, and those rights are being taken off. In that case, capital gain would arise in your hands because it's a transfer happening. Extinguishment of rights in an asset is amounts to transfer. If I had rights in the company, that rights would be considered as a asset, and that right is being extinguished once company is liquidated. Therefore, capital gain should arise in my hands. So that is why whenever we study liquidation, there is no taxation in the hands of the company. Rather, entire taxation arise in the hands of the shareholder. What taxation arise, we shall study after IFOS, or with IFOS, whatever it is. Come on to the first chart that we had with which we started the chapter. Come on to this chart. We started with basics, we understood computation, we understood the intricacies of the computation. Then we jumped to the advanced cases. Advanced cases. Wow, sir, I am feeling very happy. We are done with advanced cases. Every advanced case is done. Wow, like wow, like wow. Liquidation is to be held. We cannot do it right now. We can do it as well, but you all agreed that we can do it after I first. So I'm fine with that. Part one we shall do after some time. Let us come on to exemptions as to how do we save the capital gain taxes. How are we going to save the capital gain taxes? You all should agree that till now, whatever we have studied now, it would help us to calculate the capital gain amount. Whatever case that come our way, we will be able to calculate capital gain amount with the given knowledge. Whatever knowledge we have now, we will be able to calculate capital gain with the given knowledge. But sir, what about saving the capital gain taxes? Now we need to save as well. Na? Client comes to us for safety purposes. So lawmaker has given you 7 plus 2 exemptions. Okay, basically 7 plus 2 exemptions for saving your capital gain taxes. What exemptions do you have? First of all, Section 54. Lawmaker says that Section 54, any individual HF who transfers residential house property, a house property where you stay. If you transfer any residential house property, whatever, if you have long-term capital gain, that long-term capital gain is going to be exempt. What did I say? If you transfer any residential house property and you have long-term capital gain, we are going to exempt your long-term capital gain. Sir, how? How? You just have to buy another residential house property in India. You have to buy residential house property in India. One residential house property in India. Or, sir, till when we have to buy? lawmaker says either you can buy within 2 years after transfer, either you can buy at least 1 year prior to transfer. For example, if this has been transferred date and you had already acquired in a year before, in that case we will also exempt that. Or you can get a house property constructed within 3 years as well. So sell house property, residential house property, buy residential house property in India within 1 year, 2 year, 3 year, -1 year, +2, +3 year. We are going to exempt your capital gain. Exactly how much capital gain is going to be exempted? Lawmaker says capital gain amount or 10 crore or cost of new asset, whichever is lower, is going to be exempted in your hands, whichever is lower. Very important, sir. The new house property that you are buying should be held for at least 3 years from the date of purchase. Otherwise, exemption available shall be withdrawn. It shall be reduced from cost of acquisition. What does this mean? Let me take a moment to illustrate this. For example, this is Lokesh. Lokesh purchased a residential house property in 2001 for 20 lakh. 1st April 2025, he sold the house for 70 lakh. On 1st April 2026, he bought new house for 45, or I should say 55 lakh. And this new house, lawmaker says this new house, the new house because of which you are getting exemption, this new house should be held for 3 years. If this new house is sold within 3 years, the lawmaker says that it will be taxed in your hands. This is simply tax in your hands. How much tax would apply? Actually, when you are selling, for example, on 1st April 2027, again you are selling this asset, this new house you are selling for 90 lakh rupees. How capital gain is going to arise in your hands? First of all, whenever you sold your first house, you shall calculate capital gain at that time. Full value of consideration 70 lakh minus cost of acquisition 20 lakh. So 50 lakh would be capital gain amount. Here you will get exemption. Exemption amount is either capital gain amount or cost of new asset. Cost of new asset is 55 lakh or capital gain amount 50 lakh, whichever is lower. So 50 lakh would be exempted to you. Your capital gain is zero in previous year 25-26. Your capital gain is absolutely zero in 25-26. Okay. Now, this house should have been held for at least 3 years. This house should have been held for 3 years. Now, what lawmaker says now, if you sold this house, so again capital gain would arise, full value of consideration would be 90 lakh rupees. How much would be cost of acquisition? Ideally, cost of acquisition is 55 lakh. But out of this 50 lakh, 55 lakh, 50 lakh was already taken as benefit now, already taken as exemption. So that has to be reduced from here. Your actual cost would turn out to be just 5 lakh rupees. And this is how much your capital gain would arise. 85 lakh would be your capital gain. And this would be short-term capital gain now. This would be short-term capital gain because this asset has been held for lesser than 1 year. Clear to you all? What does this point says? If asset has been held for lesser than 3 years, the new asset that you have bought is held for lesser than 3 years, then deduction claimed earlier shall be withdrawn, exemption claimed earlier shall be withdrawn, and it shall be taxed in your hands by reducing the cost of acquisition. Okay. This is section 54 for you all. Now we have 4 or 5 special pointers, 4 special pointers basically in this 54. Listen. First of all, for example, if I want to buy a house, okay, I want to buy a flat. That flat is very small, so I bought 2 adjacent flats. Adjacent flats means 2 side-by-side flats. 401 and 402, 2 continuous flats I bought and broke the wall in between. Did the necessary modifications done, got the approval from inspector as well, and made it a one flat, one bigger flat. Will it be counted as one flat or 2 flat? If I bought 2 flats, 2 houses, did the necessary modifications done from the done middle and made it one flat, will it be considered as 1 or 2? If we have 2 flats, we did necessary modifications and made them one, will that be considered 1 or 2? Right answer is, sir, it is considered as one only. CS Executive Vipul. Hi, sir. Hi, Vipul. Lawmaker says if you buy adjacent flats now, even though you bought from different people, even if you bought on account of different sale deeds, even you paid different prices, even their sizes are different, even you bought them separately, lawmaker says they shall be considered as one if you made them one and got the necessary modifications done. Second thing, construction cost is included in land and building. What does that mean? For example, I don't want to buy a house, I want to get house constructed. So for construction, we have 3 years time limit from the date of transfer. We can construct the house within 3 years. We have 3 years time limit to get the house constructed. That is what the basic SOPs we have to get constructed. Now, what the point is, this is date of transfer, and after 2 years, it is just about to end. Is this relevant for executive? Yes, you can. Capital gain is relevant for executive, but doesn't have this much depth in the topic. I had seen it is not so much in depth. It is just a shallow topic there. You can sit if you want to. More of CS professionals. CS professional also don't have to study this depth. They have just 40 marks of income tax. So you can sit for knowledge. Maybe it's not that much relevant, but yes, a bit of it is always relevant. Now, lawmaker says date of transfer. Date of transfer, you can buy asset within you can get constructed within 3 years. After 2 years, 2.5 years, I bought a piece of land. After 2.5 years, I have not constructed, I have bought a piece of land for 1 crore. Sir, can I buy asset as well? Can I buy land? Lawmaker says yes. The construction, if you want to do construction, you have to buy the land first. Now. So cost of acquisition of land and building, cost of acquisition of land can be also claimed as reduction. Okay, exemption. Even if you want to get constructed while construction, buying land shall also eligible will entitle you the deduction. For example, this is something very personal. For example, my mother has been working hard for me. You will not believe this, but before me waking up, she woke up in the morning. I am doing struggle in teaching. My throat was not well yesterday. I was suffering from cold. But before me waking up, she gave me a cup of tea. As you saw, there was a cup of tea when we started the lecture. She gave me that cup of tea, and I drank tea, and then I could teach. So this time I thought, instead of me buying the house, I will of course buy the house, but I will get the house registered in her name. I will be paying the person, I will be paying the consideration, but registration would be done in my mother's name. Will I still be entitled for the exemption? Lawmaker says yes, you will be entitled to exemption. Even if you buy the house but get the registration done in the name of the other person, na, you shall be entitled to exemption. You shall be entitled to exemption. There will be no issue with respect to exemption. Can you buy only one house? Lawmaker says ideally you have been given one house per year. This is one house per year limit. Every year, if you have capital gain, every year you can buy new house. Every year, if you have capital gain, every year you can buy new house. But issue is what? But issue is once in a lifetime you can buy two houses as well. If your capital gain amount is up to 2 lakh rupees, 2 crore rupees now. If your capital gain, long-term capital gain is up to 2 crore rupees now, then in that case you can buy two residential house properties once in a lifetime. Not always, but once in a lifetime you can buy two houses. Sir, what if construction is not complete within 3 years after the purchase of the land? After purchase of land, we don't have to see. After transfer, if construction is not complete within 3 years, what will happen? You will not get exemption. See, construction has to be seen if construction is kacha pakka. What is kacha pakka? If structure is done, flooring, structure is done, entire thing is done, elevation is done, only flooring is pending, tiles is pending, water taps are pending. See, if entire construction is done now, you will get exemption. That is subject matter of to be see I'm to be very precise, it is subject matter of case to case basis, but we have evidences that if structure is done now, structure is done, front elevation is done, you are entitled to exemption. You are not staying because some petty works are pending. I shall study. We have this example that if construction is complete but floor fittings are pending, then it shall be deemed constructed under 54. If it shall be deemed constructed, we have this provision. Okay, did you understand 54? Just tell me. Did you understand section 54? As sir, as sir. What is this as sir? Yes, sir. Moving further, next exemption, that is 54B. Next exemption we have 54B. Try understanding this. Huh? If you are an individual HUF who has urban agriculture land and this urban agriculture land is transferred, you have long-term capital gain. This urban agriculture land was used for at least 2 years. You had urban agriculture land, you transferred that urban agriculture land, you used that for 2 years, you have long-term capital gain. Lawmaker says whatever long-term capital gain is there, we will exempt that long-term capital gain. But for that matter, what you have to buy? You have to buy either urban agriculture land or rural agriculture land. You have to buy either urban agriculture land or rural agriculture land. So till when you have to buy, sir, you have to buy within 2 years from date of transfer. 2 years from date of transfer, not immediately, but 2 years you can buy. Whatever new land you are buying now, you should hold that for at least 3 years. At least 3 years, sorry, you should hold. If you held lesser than 3 years, the lawmaker says that in that case, again, exemption claimed earlier shall be withdrawn. This will be withdrawn, and this exemption claimed earlier shall be reduced from cost of acquisition. Basics is that only. Basics is that only. Okay. Individual HUF, urban agriculture land used by himself or parents for at least 2 years. You have long-term, short-term capital gain. This you have to buy urban agriculture land or rural agriculture land within 2 years. You have to buy capital gain amount or cost of new asset, whichever is lower, will be exempted. Whatever new asset you are buying, you should hold for at least 3 years. Otherwise, capital exemption claimed earlier shall be withdrawn and it shall be reduced from cost of acquisition. Investment you can buy for some other person as well. You can buy for some other person as well. Simple provision. It is 54B is very simple. Anybody having any doubt in 54B? Krishna, I'll answer you. Krishna, I have answered to your question. I will answer you later on. I have answered to your question. That will come our way. For sure, remind me. I will answer that thing. Section 54, simple, simply clear to everybody. No, sir, no doubt. I have a question for you all. Let me try put things into perspective. A focus worth understand. A focus worth giving. Okay? We have a person called Mr. Gurnoor. Instead of that Mr. Gurnoor, we shall take some other person. Okay. For example, we have person named Lokesh. Mr. Lokesh. Mr. Loka. Mr. Lokesh had bought urban agriculture land on 1st April 2002. What was the cost? Cost was 30 lakh rupees. Fine. On 1st April 2025, he sold that urban agriculture land for 70 lakh rupees and bought urban agriculture land for 35 lakh on the same date. He bought land on same date. This new urban agriculture land was sold by Lokesh. This new urban agriculture land was sold by Lokesh on 1st October 2025 for 95 lakh rupees. 95 lakh rupees he sold it. And he bought rural agriculture land the same day. On 1st April 2026, he sold this rural agriculture land for 1 crore rupees. In 1 year, he bought urban agriculture land, he sold that, he bought rural, he sold rural as well. What will be the entire capital gain for the year? You just have to try answering it. Try answering that. I am giving you 2 to 3 minutes to solve. It is 7:21. I am giving you time till 7:25. Just tell me the capital gain for the entire year. How much capital gain would be for the entire year according to you? You might be wrong. You might be wrong. Absolutely fine to me. You don't have to be perfect now. Point of learning is this only. The more mistakes you do right now, the lesser mistakes you would do in exam. Tell me the capital gain. Tell me the capital gain amount. Whatever your answer is, just tell me the capital gain amount. If you think that short-term capital gain would be applicable, how much would be long-term? How much should be short-term? Just answer that. If you think that entire would be long-term, tell me the total. If you think entire would be short-term, whatever short-term would be there, just tell me. I just want answer. If this was an MCQ question, what would be your answer? Or if this would be one word answer, what would be your answer? Subramanian says 145 lakh. Very nice, Subramanian. I am noting this answer. Kavi says 90 lakh. Okay. Krish, 40 lakh. Vipul, 1.2 lakh. I don't know anything. I just want the answer. Kavi, I don't know anything. I have given you a question and you have to answer. Vetri, LTCG, Kavi 95 lakh. Okay, 95 lakh. Vetri says LTCG 5 lakh. STCG 1.35 lakh. Okay. Anybody else who want to answer? Vetri Selvan. Chris changed the answer to 75 lakh. Okay. Lokesh. Why? 10 people and 10 answers. LTCG 5 lakh and STG 30 lakh. Why? Acha, one answer has been repeated. Kavi said 95 lakh. Kavi has been seconded by Krishna as well. Deepak. LTCG 5. STCG 125. Gokul. Oi, hoi, 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 hoi. 95 is ST and long term is 5 lakh. Oh, see, no two answers are common except for Kavi and Krishna. No two answers are common. No two answers. And you think, and this is not a topic of CA final, this is a topic of CA intermediate. Wow. Wow. We are done with the time. We have given sufficient time. If somebody who is still trying to do, solve it. Okay? Before me solving, the more brainstorming you would do, the better your knowledge would be. Now, how do we solve this type of question? Let me try. First of all, we have to identify how many transfers have took place. First transfer took place of this urban agriculture land. Second transfer took place again this urban agriculture land, and third transfer took place was rural agriculture land. So three transfers took place. First of all was this urban agriculture land. Full value of consideration was 70 lakh. Cost of acquisition was 30 lakh. Capital gain was 40 lakh. Minus exemption, we bought rural agriculture land for 35 lakh rupees. So this would be 35 lakh. Therefore, 5 lakh would be long-term capital gain. This is fixed. Anybody who has not given long-term capital gain is wrong here now. Wrong, 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 wrong. Wait for a second. I'm not wrong. I'm not disregarding the answer. Let's see. Maybe you have given total, so it is possible. I'm not saying anything. Moving further. This urban agriculture land is again sold. So our full value of consideration for this urban agriculture land would be 95 lakh. Now, wait a sec. This urban agriculture land, how much cost of acquisition we are going to take? This urban agriculture land was bought for 35 lakh rupees. So 35 lakh would be cost of acquisition. Yes. Is that the same thing? Sir, 35 lakh would be the cost of acquisition. It should be. But sir, already we have taken exemption now. Already we have taken exemption now. Entire exemption has been taken. Entire cost has been used up in exemption. So our cost of acquisition would be 0. So our capital gain would be 95 lakh. Our capital gain would be 95 lakh. Sir, my point to all of you is, I bought a rural agriculture land within 1 year. So shouldn't be the case that I can claim exemption again 54F, 54B? Shouldn't I be allowed to claim exemption again? Shouldn't I be allowed to get exemption again? Shouldn't I be allowed to claim exemption? Section 54B clearly states now that as capital gain can be short term, capital gain can be long term as well. Shouldn't I be allowed to claim exemption on this as well? Why I should not be allowed exemption? It is a short term capital gain. Right answer is I will not be allowed exemption on this. Why? Because this asset capital gain should not only be short term, our land should have been used for at least 2 years by us. We bought this land on 1st April 2025 and sold it on 1st October. We should have used this land for at least 2 years. We should have used this land for at least 2 years. If we are using it for lesser than 2 years, so we will never get exemption. We will never get exemption. It should be used for 2 years. In that case, it has to be short term, long term, anything can happen. Then we will be given exemption. Otherwise, we will not be given exemption. So it's not just that we can have short term, long term. No, short term, but it should be used for 2 years. It is not used for 2 years. It is nowhere mentioned. So exemption will not be given. This 95 lakh would be short term capital gain. Sir, we sold rural agriculture land for 1 crore. Cost of acquisition was 60 lakh rupees. Capital gain would be short-term capital gain would be simply 40 lakh rupees. But since rural agriculture land is not a capital asset, we will not be given any capital gain. So our answer would be 5 lakh and 95 lakh. That would be the answer. How many of you have given the answer? Not Subramanian, not Kavi, not Krish, not Vipul, not Vetri, not Lokesh, not Deepak. Gokul, I guess, was the right person. Gokul was the right person in this regard. Now there comes a confusion now. Students are confused. There is a difference in student community. At one point, sir, you are saying that it can be short-term capital gain as well, it can be long-term capital gain as well. Plus, you are saying that you should use it for 2 years. Use it for 2 years. How is it possible, sir? How is it possible that you have to use it for 2 years as well? And it should be long term, it should be short term as well. How is it possible? You are saying that we have to use it for 2 years. And we will exempt short term capital gain, long term capital gain as well. Arey Baba, if we would have used it for 2 years, why would there be any short term capital gain? There would be always long term. So why lawmakers said short term? Because there is a reason. For example, let's take an example to illustrate. Everything as an example to be understood. For example, on 1st April 2011, you took a land for You took a land for rental basis. You took a land on rental basis. You are not the owner, but you are a tenant in that land. You have been a tenant and you are tenant till 1st April 2024. And you sold that land on 1st April. So you became owner on the of that land on 1st April. Now you sold that land on 1st April 2025. You have been a tenant for long 13 years, but you became owner a year before. Therefore, it is possible that here in this case, capital gain will be short term. Capital gain will be short term capital gain because you are owner just a year back. But you will be given exemption because you have been using this land for more than 2 years. So capital gain can be short term as well because here condition is not to own for 2 years, but condition is for to use for 2 years. We might be tenant before, we might be tenant a year before. Therefore, capital gain can be short term, but 2 years use condition should be there. Clear to you all or not? Is it clear to you all or not? Should we take another example if you want to? Should we take another example? Let's see. Yes, sir. Clear, sir. Great, sir. Now, on 1st April 2022, Rahul had bought an urban agriculture land for 40 lakh rupees. I had bought an urban agriculture land for 40 lakh rupees. I sold that urban agriculture land on 1st April 2025 for 70 lakh rupees and bought a rural agriculture land for 25 lakh rupees. Within 6 years, I sold that rural agriculture land for 72 lakh rupees. What would be my capital gain? Just tell me this thing. What would be my capital gain for previous year 25-26? Just tell me this thing. What would be my capital gain? Oh, what would be my capital gain? Just a minute, I'm giving you. Tricky this time. Very nice. Kavi has given answer 5 lakh of long term capital gain. Sir, 5 lakh long term capital gain. Very nice, Gokul. Very nice, Gokul. Now you have started to synchronize. Now we have two capital gain happening. First of all, is this full value of consideration would be how much it would be, sir? 70 lakh. Cost of acquisition would be 40 lakh. Your capital gain amount would be, sir, 30 lakh. Can you buy rural agriculture land? Sir, yes, you can buy rural agriculture land. Whenever you buy rural agriculture land, you will be given exemption. So exemption of 25 lakh would be given to you and 5 lakh would be long-term capital gain. Now, this rural agriculture land has been sold within 6 months. This rural agriculture land has been sold within 6 months. So full value of consideration on this rural agriculture land would be 72 lakh. Minus cost of acquisition was 25 lakh. But since this has been already taken as exemption, we would reduce it. So our cost of acquisition becomes zero. Our capital gain would become 72 lakh, and this would be short-term capital gain. But since rural agriculture land is not a capital asset, no exemption, no capital gain would arise. Our final answer would become 5 lakh rupees as long-term capital gain. And as rightly answered by everybody, 5 lakh. Deepak says 30 lakh. See, what your concern is na, Deepak said the same thing and Subramanian said the same thing. What your concern is, let me tell you. This 25 lakh, you think that is to be reduced. Your exemption is withdrawn and reduced from cost of acquisition. I am saying do it. Withdraw this exemption. Withdraw this exemption. Reduce it from cost of acquisition as well. Okay, did sir. Still, whatever capital gain increases in this rural agriculture land, everything would be exempt. Arey bhaiya, if I take away this exemption, what I'm going to take away? I'm not going to directly tax it. We are never going to tax that. We can use this against the rural agriculture land. Our rural agriculture land capital gain would increase. Increase it. Take zero. Take minus cost of acquisition. Minus of cost of acquisition. Take minus 100 crore. Arey baba, everything would be exempted na rural agriculture land. So everything has been saved. Wow, sir. Got it, Subramanian Deepak. Deepak is different. Subramanian is different. If I am correctly pronouncing your name is, I mean, Unnamalai. Annamalai. Oh, Annamalai Subramanian. Okay. This is the 54B. Then we have section 54D. What this 54D talks about. Achha, sir, just one thing we are asking. Just one thing we are asking. Is this really being asked? Is this really asked in exam? Sir, is this really asked? Has this ever been asked at CA final level? This has been asked. Annamalai. Okay. Okay, Annamalai. Done. Though this has not been asked in DT, but same question was asked. Same question was asked in IBS. Sir, withdrawal provision will be applicable. I am agreeing to you. Agreeing. Deepak, agreeing to you. Withdraw exemption. What will you do? After withdrawing, whatever exemption claimed has to be reduced from cost only, na? Reduce from cost. Make it zero. Make your cost of acquisition zero. Your capital gain would increase. Your capital gain will shot up. If your capital gain shoots up, again it would be exempted. Increase it. I'm saying increase. I'm saying withdraw exemption. Reduce from cost. Reduce. Make it zero. Your capital gain would rise. Sir, again, if capital gain rises, no capital gain is going to arise in case of rural agriculture land. Got it? Section 54D. What this 54D talks about. This provision is applicable to any person. Lawmaker says any person. Now, what this provision says, if you are doing if you have industrial undertaking, that means you have a factory for manufacturing and all. This industrial undertakings, land or building has been compulsorily acquired. That means government had to make a railway line, government had to make temple. This day temple is also trending. So if government had took your property, which was for industrial undertaking for it took under compulsory acquisition. Your land and building has gone away since compulsory acquisition is also transferred. So you would have capital gain arising. This land should have been used for 2 years. Lawmaker says whatever capital gain arise will be exempted in your hands if you buy new land or building within 3 years from date of transfer. Whatever new land or building you are buying, you should hold them for 3 years. If you sell it within 3 years, now that exemption claimed earlier shall be reduced from cost of acquisition. Same provision as it is copy paste. Nothing to be studied in this point. There is nothing. But now we have special things. 54 EC. Very beautiful section. I mean, a section which is worth giving time to. So 54 EC is given to everybody. Every person who is there na, is given 54 EC. Now, what 54 EC simply implies? The lawmaker says you have land or building as long-term capital asset. And you have long-term capital gain normally. Why normally? I'll come to that point later on. If you have any long-term capital gain, which is land or building, and you transfer that and you have long-term capital gain, lawmaker says we are going to exempt that. But here you don't have to buy house. Here you have to buy 6 types of bonds. Any bonds you may buy. You might buy bonds of NHAI, National Highway Authority of India, Rural Electrification Corporation Limited, or I should say Power Finance Corporation Limited, IRFCL, Indian Railway Finance Corporation Limited, or you might have IREDA, Indian Renewable Energy Development Authority, or you might have HUDCO, Housing Urban Development Corporation. You might buy any of the six bonds. We will give you exemption. Maximum 50 lakh exemption would be given. Any amount of bonds if you buy now, you can get exemption, but maximum 50 lakh would be given to as exemption. Within 6 months from the date of transfer, you have to buy these bonds. Lawmakers are very clear. Lawmakers are very clear that cost capital gain, cost of new asset, or 50 lakh, whichever is lower, would be given to you as exemption. Now, here in this case, now the newer bonds, the new bonds that you have bought, lawmakers says you should hold them for at least 5 years. Here, 3 years lock-in is not given. Here, 3 years lock-in is not given. Lock-in lawmaker says you should hold them for 5 years. Sir, what if I sell them within 5 years? Exemption claimed earlier shall be withdrawn and it shall be taxed in your hands. Oh, okay. Exemption claimed earlier shall be withdrawn and taxed in your hands. First thing. Second thing, sir, what if I didn't sell the bonds? I converted them into money. What does conversion into money means? For example, if I have bonds and I kept this bonds to bank as mortgage and took loan against that. Lawmaker says that it is conversion into money. Any conversion of money into bonds, any conversion of money of bonds shall also be taxable in your hands. Why, sir? Because government's intention with 54 EC is that your money should go to these companies, NHAI, RECL, PFCL, IRFCL, HUDCO, IREDA. Your money should go. If you took mortgage, it's directly bank's money going there now. If you took mortgage against these securities, bank's money is going there. Bank is there now. Your money should go. Bottom line is your money should go to these companies. Then only exemption would be given. Therefore, if you convert these bonds into money, exemption will be withdrawn. None, sir. So loan taken shall be absolutely taxable. Now, sir, 54 EC is somewhat special. Why 54 EC is somewhat special? First of all, is it possible that I am selling a house property and buying house property and claiming 54 EC 54, plus I am buying bonds and claim 54 EC as well? Can I claim two sections simultaneously? Can I claim two sections simultaneously? Lawmaker says yes, you are allowed. Yes, you are allowed. You can buy two, you can claim exemption under one section, two section, even sometimes three sections are also possible. Sometimes even three sections are also possible, exemption wise. So how is it possible? I'll tell you, don't worry. But there it is possible that you might claim exemption under three sections. How? We shall discuss that. Second thing, for example, I sold a house on 1st April 2025. Now, law mandates me to buy a house. A new house should be bought within, bond should be bought within 6 months. Bonds should have been bought within 6 months. How much is the period with up to 6 months? That means up to 30th September, bond should have been bought. Bond should have been bought within up to 30th September. Sir, I paid money on 28th September, but allotment was done very late. Allotment was done on 1st Feb 2026. Will I be given exemption on this or not? Will I be getting exemption on that? Will I be getting exemption on this? Lawmaker says yes, you would get exemption. You would get exemption. You would get exemption here because what is in your hand is the payment. What is in your hand is payment. Allotment might be done a year later, allotment might be done 15 days later. Within 6 months, you cannot guarantee allotment. So payment has to be done within time. Allotment can be done later as well. You will be given exception. Okay. I see. I see. Hmm. Hmm, 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 hmm. Okay. Very special case close to my heart. What does this say? There was a building used in business. acquired for 20 lakh in 1st April 2022. Moving forward, since this building was used in business, so this is a depreciable asset. Business in building is depreciable asset. On 1st April 2025, I sold, or I should say, this building's WDV was nearly 14.5 lakh, and I sold this building for say 50 lakh and bought bonds of NHAI worth 35 lakh. How capital gain would be computed? Let me tell that thing. Okay? Before you answer, let me tell. Whenever you sell building, full value of consideration will be money received, 50 lakh. Cost of acquisition for any asset transferred is nothing but WDV. We have discussed this thing yesterday only, that cost of acquisition for any depreciable asset is WDV. That is what we have studied now. Cost of acquisition is WDV. So WDV here is 14.5 lakh. Capital gain arising would be 35.5 lakh. This is the capital gain arising. Now we have been taught, I mean, not now, I have not taught you, but we have been taught in past, we have been taught in intermediate, and I will teach you personally at PGP chapter, that if you sell any depreciable asset, you have short-term capital gain. You have short-term capital gain. Point here is, sir, will exemption under 54 EC would be allowed? Will exemption under 54 EC be allowed to you? Will exemption under 54 EC would be allowed to you if you sell any of the short term, if you sell any building which is used for business purpose or depreciable building, you have short term capital gain. Will exemption be allowed to you? Right answer is you will be given exemption. You will be given exemption. 50,000 would be capital gain in your hands. How this has been working? Understand. Section 54 EC, if you clearly read now, it doesn't talk about long-term capital gain. 54 EC clearly states that asset that you are transferring, land or building you are transferring, should be long-term capital asset. The land or building that you are transferring should be long-term capital asset. Why long-term capital asset? Because long-term capital asset is the basis. Asset should be long-term capital asset. To make that asset as long-term capital asset, we might hold it for more than 2 years. Are we holding it for more than 2 years? Yes, sir, we are holding. So asset is long-term capital asset only. But since it is depreciable asset, we are having short-term capital gain. So will we be given exemption on this asset? Lawmaker says, yes, you can be given exemption on this asset as well. You can be given exemption on this asset as well, long-term capital asset, but capital gain being short-term because it is depreciable will not disentitle you from exemption. What did I say? Any long-term capital asset having short-term capital gain will also yield you exemption. You will be given exemption under section 54 EC. This was given in case of VS Dempo case law. Supreme Court gave this judgment in case of depreciable asset being long-term capital asset and capital gain being short-term capital gain, it will be eligible for exemption under 54 EC. Understood this thing? Dear, did you understand this point? Did you understand this concept? Did you understand this concept or not? Yes, sir. This is 54 EC for you all. This is 54 EC for you all. See, I'm trying to cover all the technicalities that are there in the sections. that might be asked in MCQs, that might be asked in IBS, that might be asked anywhere. You should be able to tackle that. I'm trying to cover every case possible. Okay? Exemptions isn't a topic that somebody would take in power batch for an hour. But the fact is, I have been experiencing this, that students are facing difficulties in basics of exemption. This is a topic where students have been assuming that you know everything. But when details are being asked, students are making mistakes in these topics. Okay? That is why this topic is important. I personally think this topic is important. Section 54F. Now, Section 54F says if you transfer any long term capital asset other than residential house property, here you might be transferring land. Land will be covered under 54 EC because it is not a residential house property. Okay. You might transfer gold, you might transfer shares, you might transfer maybe a commercial property, a gray area, always a gray area. Anything other than residential house property, if you are transferring and you are an individual HF, you have long-term capital gain, then you have to buy one residential house property in India. One residential house property in India has to be bought. So till when you have to buy? Lawmaker says within transfer, either you can buy within 2 years, either you can get that constructed within 3 years, even a year before you can buy. Anything you can do, you will get the exemption. But here, sir, exemption is not the simple one. You are not given exemption just on the capital gain amount. Exemption is given as capital gain into cost of new asset divided by net consideration. Maximum 10 crore exemption you will be given in 54F. The new asset that you are buying should be held for at least 3 years, else it would be separately taxable in the year of violation. Simple thing. See, if you are buying asset in joint ownership implies, for example, if me and my wife both are buying the house, registration is being done half in my name, half in wife's name, but entire consideration I am paying. Lawmaker says you will get the exemption. You are the one who can claim the exemption. Sir, for example, if I am getting a house constructed and my structure is done, entire work is being done, but simple petty works are pending. Petty works imply, sir, petty works means furnitures and fittings are pending, or I should say floors are pending, tiles are pending, or some tap work or some sanitation work is pending. Most of the construction is done, but some petty works are pending. Finishing work is pending now. Finishing takes years to complete. So in that case, lawmaker says you are entitled to this exemption. There is no one who can stop you. Important section. Residential house property should not, SSC should not hold any other residential house property other than one property before claiming exemption. What does this mean? See, for example, if I have one residential house property, okay, I sold some land, or I sold some gold, or I sold some shares and bought a residential house property. Will I get exemption on this property? Lawmaker says yes, because you already had one, you bought this, so you are entitled to exemption. Now you have two properties, two residential house properties. Now, what if you sell something extra and you buy third? Can you buy that? Lawmaker says no. The date on which you are transferring the asset, now, at that time you should have only one residential house property. The second one should be the one you are going to buy. Second one should be the one which you are going to buy. Remember, once you have taken exemption, once you bought the second property now, then this section will not give you an exemption. That means this is only for those who have one residential house property are looking for the second one, maximum. If you already have two, then you cannot claim any exemption. If you don't have, you can of course claim exemption. But if you already have one, you can buy second. After second, you will not be given exemption. For that, you have to sell the first one. Okay? So what is the basics? This point is pending. This point is not that valuable. But the point is, Section 54 talks about if you sell any house property, residential house property, and buy residential house property. 54F talks about if you sell any other asset and then buy residential house property. Okay? This is the difference between the two. How exemption is calculated? Let me tell with an example. For example, we have with us Kamal. Kamal has gold. 1st April 2001, he bought gold. At that time, he had 1 kg gold, which was valued for 5 lakh rupees. 1 kg was valued at that time of 5 lakh rupees. Wow. Today he'll not get 10 grams for this 5 lakh. He would get 10 lakh. I mean, he would not get 100 grams for this 5 lakh. On 1st April 2025, he sold this gold for 1.5 crore. Oh my dear God. And within 6 months, he bought. Achha, there were some transfer expenses as well. 2% were transfer expenses. He bought a house for 1 crore. How much would be the exemption amount? Understand this. Huh? Full value of consideration will be 1 crore 50 lakh. Transfer expenses 2%, 1 crore 50 lakh, that means 3 lakh it should be. Net consideration is 1.47, 1 crore 47 lakh. Minus cost of acquisition is 5 lakh. Capital gain amount, long-term capital gain amount is 1.42 lakh. How exemption would be claimed? Exemption is nothing but long-term capital gain into cost of new asset divided by net consideration. Sir, long-term capital gain here is 1 crore 42 lakh. Cost of new asset 1 crore. Net consideration was 1.47. So this is in what ratio you will get the exemption. Lawmaker says whatever the net consideration is there, now you should use that. You should not use just the capital gain amount, but you should use the net consideration amount to claim the exemption. So 142 divided by 1 for 1.47 into 1. So the exemption amount here would be 96,59,863. This is the exemption amount you would get, and 45 lakh 40,136 is the capital gain taxable in your hands. That is how things go. In this ratio, you have to claim the exemption. Anybody having any doubt? Anybody having any doubt in this point? 54F. Just confirm me whether it is clear to you or not. See, now for 5 minutes, now I will be telling a topic which is absolutely irrelevant. Absolutely irrelevant. I will be telling a topic now which is absolutely irrelevant. Okay. If somebody who wants to skip for next 5 minutes, want to have a power nap of 5 minutes, can have. Okay. Absolutely irrelevant topic I am teaching. Okay. For next 5 minutes, absolutely irrelevant. Sir, why is it irrelevant? We want to listen. We want to ascertain why did you call it irrelevant? Maybe it is useful. Who knows? Okay. We have a name, Mr. Goli. Goli. Goli is the name of the person. He bought a piece of land of 40 lakh rupees. Okay, in 2002. On 1st April 2025, he sold that land for 70 lakh rupees. Oh. Stamp duty value was 95 lakh rupees. He bought a new house of 10 lakh rupees and 5 lakh was NHAI bonds he purchased. Somebody who is listening, okay, I said no, it's irrelevant. You can sleep for 2 minutes. Somebody who is listening can calculate capital gain. Can you calculate capital gain? Can you calculate capital gain? I'm giving you 2 minutes just to calculate capital gain. 2 minutes. Can you once help me out in calculating capital gain? Can somebody help me out? See, I have forgot. You know what? Teaching you continuously now hampers my memory. So I forgot how to calculate. Can you help me out? Sir, you overact a lot. Arey, I do it, I know, but please, can you help me out? Can you all help me out? You already know na capital gain chapter. You have already studied that na. Sir, we have studied, but still we were doubtful. Then only we came to your classes na. If you were already knowing, why would we take classes? Are still you can give it a try and I'll correct you. I understood your feelings. I understand your feelings, but give it a try. Lokesh says nil. Gokul says 3.68. Krishna says nil. Okay. Let us try. Let us try. Let us try. Full value of consideration. See, whenever there is a question, I always say now draw the format. Format is going to simplify things for you. Okay. Full value of consideration minus transfer expenses will give us the net consideration. Minus cost of acquisition will give us the capital gain. Minus exemption 1, 2 will give us the taxable capital gain. Let's see. What is the full value of consideration? Sir, full value of consideration is 70 lakh rupees. 70 lakh is the full value of consideration. But tell me, didn't I teach you yesterday one thing? Sir, if SDV has been given to you and SDV exceeds 110% of consideration, so we have to ignore this. Our full value of consideration would be 95 lakh. Section 50C. Yesterday only I taught you. Transfer expenses are not given to us, so transfer expenses are 0. We'll write it as nil. Our net consideration would be 95 lakh. What is our cost of acquisition? Our cost of acquisition is 40 lakh. So our capital gain would turn out to be 45 lakh. Capital gain is 45 lakh rupees. Done, sir. Now, how do we claim the exemption? So there are two steps. First of all is section 54F. 54F talks about long-term capital gain into cost of new asset divided by net consideration. How much would be the capital gain amount? Long-term capital gain is 45 lakh. Cost of new asset is 80 lakh and net consideration was 95 lakh. This is how the things are going to be now. This is how things are going to be 45 lakh divided by 95 lakh into 80 lakh. So 37.89 lakh would be the exemption amount. Oops, sorry. Sir, 55 lakh, my bad. So 55 divided by 95 into 80. So exemption would change 46.32. This would be the exemption amount. I got that. I got. And second exemption under 54 EC, I would get. Can I get two exemptions? Sir, of course you can get two exemptions. There is no harm in that. If you sell urban agriculture land, you might get 3 exemption. Urban agriculture land, if you sell, you might get exemption under 54B as well. You might buy higher house as well, 54F you would also get. You might buy a bond, 54 EC also you would get. So 3 exemptions are also possible in some cases. So multiple exemptions under different sections are available on the same transfer. Done, sir. 54 EC we would get. How much 54 EC we would get, sir? 5 lakh of exemption we would get here. So our taxable capital gain is this only. 3.68 lakh is the capital gain taxable. How many of you did get this correctly? We had Deepak went something wrong. Bhuvana, I think answer was wrong. Somebody said this correctly. I guess if I'm not mistaken, somebody told the correct answer. 3.6. Gokul said it correctly. 3.68 is the capital gain exemption. Fair enough. This is how you have done, or this is how you would do. Yes or no? This is the basics now. Did I teach you anything which is super normal? Did I teach you anything which is super normal? Did I teach you anything which is super normal, sir? Unable to digest, unable to digest. Did I teach you anything that, sir? But this, how is it irrelevant? How is it irrelevant? This was an example. We could have practiced it. Let me tell you. This was the point. Sir, your net consideration could have been 75 lakh, 70 lakh because your actual money received is 70 lakh rupees. When you sold that property, your money received was 70 lakh rupees. But since money received was not relevant, you took SDV. You took SDV as full value of consideration. Yes, correct now. You took SDV as full value of consideration. Fair enough. Now, assessing officer has some kida, you know. This is a kind of animal. This is a kind of animal. If this animal is in your wrong parts, wrong body parts, it can create you some itching. If this animal, this kida, this insect, if it is in the wrong parts of your body, it can cause itching. So this kida was this insect was in some of the wrong parts of the assessing officer. What he says, listen, assessing officer argued, your full value of consideration is taken as SDV. Okay. But how can you claim exemption on 80 lakh rupees? How can you claim exemption on 80 lakh rupees? You received just 70 lakh rupees. So exemption will be given on 70 lakh. Because money received is 70 lakh rupees now. You are putting 10 lakh out of your own pockets. We will not give exemption on that. Assessing officer denied this. Assessing officer denied the exemption on above 10 lakh rupees because money received was just 70 lakh rupees now. Out of 10 lakh has been extra put by SSC. Out of his own pocket, he is putting 10 lakh rupees. So it does not make any sense. It does not make any sense. And when full value of consideration was taken as SDV, so to claim exemption, we need to use this SDV only. We might not have sufficient money from the sales, so we might have to put extra money to claim exemption. Extra money can be put from our own pockets also. We should be given exemption on that. This is what court said. This was judgment in case of Goli Mahadevappa. It was Karnataka High Court which said the same thing. I mean, very baseless thing. Assessing officer argued that when your sales amount was 70, but full value of consideration was taken as SDV. So how can you put extra money? How can you get some extra money? This extra money of 10 lakh rupees, how can you bring? We will not give you any exemption of your self put money. The money that you are putting out of your own pockets, we will not give you any exemption. Arey Baba, what the thing it is? If department is increasing my sales to SDV, it is increasing my sales amount, it is increasing my net consideration amount. I want to put na money, otherwise how can I claim exemption on entire amount? How can I claim exemption of 95 lakh rupees if I have just 70 lakh in cash? I need to put some money in cash. I need to put money from my own pockets. I should be given exemption for that as well. This is only given. This is only said in case of Goli Mahadevappa. To be honest, this is a topic I don't know how can it be asked in exam. But the key that the insect that was there in the assessing officer, I too had that insect. I too had that insect. I could not leave this. What this actually means out when I read the provision, try reading it with me. Where SDV has been taken as full value of consideration, SDV, that means your denominator has been increased. Then reinvestment for acquiring house property, which is in excess of the actual net consideration. Your net consideration was 70 lakh rupees. Your SDV is 95 lakh rupees. Now, if you want to claim exemption, you must buy a house property of 95 lakh rupees. How can you get extra money? You have to bring money out of your own pockets. Lawmaker says if you bring money out of your own pockets, you will be given exemption. It's not necessary that that money should be coming from sales only. You can put money out of your own pocket if SDV has taken as full value of consideration. Less relevant point. Now I think you are woke up. Now this was the topic. Now you can wake up. Listen. Now wake up, wake up, wake up, wake up. We are done with the topic. Okay, we are done with the topic. Done with the topic. Okay. This was all about 54F for you all. Okay? Now we have two more sections for exemption, 54G and 54GA. What these two sections is. Both the sections talk similar, so I wrote them side by side. Any person, any person. Here we have transfers assets, land building, plant and machinery of industrial unit of urban area, land or building, plant and machinery of industrial unit of urban area. In both the cases, you are transferring yourself from urban area to some other place. In that case, you have capital gain on land or building, plant and machinery. In both the cases, furniture is not covered. Okay. Here, what it says, land or building, plant and machinery. Whatever capital gain is there now, we will exempt that if you transfer to rural area. But in this section 54GA, lawmaker says if you have land or building, plant and machinery and you have capital gain and you transfer to urban area, sorry, not as special economic zones. In both the cases, you are relocating from urban area. In one case, you are transferring to rural India, and the other case, you are transferring to SEZ, special economic zones. Whatever capital gain on land or building, plant and machinery is there, we are going to exempt. Sir, how much time we should buy? A lawmaker says that on the date of transfer, if you have already bought within 1 year or if you will buy within 3 years, we will give you exemption in both the cases. In both the cases, capital gain or net amount invested, whichever is lower, will be exempted to you. In both the cases, you have to hold those assets for at least 3 years to claim the exemption. Otherwise, exemption shall be withdrawn. Simple thing, as simple as it can be. One more special thing worth noting, if you are transferring from urban area to rural area, plant and machinery can be sold in urban area but has to be bought in rural area, and it should be new plant and machinery. Whereas when you are transferring from urban area to SEZ, there is no such condition that plant and machinery should be new. It can be second hand as well. This is major difference. So in these two sections, there are two differences only. First of all, in one case, you are transferring from urban to rural. Here, you are transferring urban to SEZ. Here, your plant and machinery, land or building has to be sold, and plant and machinery, land or building is to be bought. Plant and machinery, land or building to be sold, plant and machinery, land or building to be bought. Here, plant and machinery sold and plant and machinery bought should be newer one. Here, second hand can also be there. Second hand plant and machinery can be also bought. In both the cases, exemption on furniture is not allowed. Furniture is not allowed. Okay? A very practical thing I am going to tell you now. Very practical thing, understand. Huh? Under all the sections, I taught you nearly 7 sections right now. 7 sections I have taught you. Krishna, I guess, had this doubt. Listen carefully. For example, this is previous year 25-26. If I transfer any asset, for example, on 1st April 2025, lawmakers under various sections have given us multiple time limits. If you see 54, it says you can buy asset within 2 years, you can get constructed within 3 years. If you say 54B, you can buy assets within 2 years. 54D, you can buy assets within 3 years. 54EC, you have to buy bonds within 6 months, so I'm ignoring that. 54F, you can buy asset within 3 years. Sorry, you can buy within 2 years, constructed within 3 years. 54GGA says you can buy asset within 3 years. So we have multiple time limits. Listen. Practically, I am telling you, practically. If I sold asset on 1st April 2025, not 1st April, let's take something different, some different date. For example, you sold asset on 1st March 2026. You have to buy asset within 2 years. You have to buy asset within 2 years. But sir, practical issue is there. On 31st July, I have to file my return of income. I have to file my ROI, in which I have to calculate full value of consideration. I have to reduce cost of acquisition. I have to compute capital gain. And here only I have to claim exemption. If I don't claim exemption, government is going to tax it. If I don't claim exemption, government is going to tax it. Sir, how is it possible that if I have to buy asset within 2 years, how can I declare how much would be my exemption amount in ROI? In questions, I always give you the date of acquisition, I give you amount of acquisition, I give you new asset property, whatever it is, price, purchase price it is, I tell you everything. Practically understand, now on date of ROI, how can you ascertain what will be the amount of exemption you will be claiming? When you buy property, you don't know what is the value. Whenever you construct a house, you don't know how much is going to be spent. How can you claim exemption today? And let us suppose you already know how government will believe you. Government is never going to believe you. In that case, lawmaker says that up to date of ROI, whatever exemption you expected to claim, whatever exemption you expected to claim, you should deposit to capital gain accounting scheme. Capital gain account scheme, at any bank you can create a capital gain account where you have to deposit the amount. If amount is not deposited to CGAS, you will not get exemption, because this is a proof that ultimately you will use it for construction, and you can withdraw this money from CGAS for construction purpose. Whenever you want to do construction, you can withdraw money from CGS, use it for construction, otherwise you will not get money. So government has a track everywhere when you have capital gain, except for 54G. Whenever you have capital gain now, that capital gain should be deposited to CGAS, and that capital gain will be exempted to you, because otherwise government will not believe now. Today I am saying I will buy a new house for 10 lakh rupees, 10, 20 lakh rupees, but tomorrow if I don't buy, so I have to deposit this money to CGAS. If I want to buy, I have to withdraw money from CGS. Government will acknowledge, the government will understand whether did I buy or not. So this CGAS scheme is also important. In all the sections, you have to deposit the capital gain amount to CGAS to claim the exemption. Once you deposit capital gain amount to CGAS, government will give you deemed exemption today. Exemption will be given for previous year 25-26 only. Later on, when you did not utilize the CGS amount, or you misutilize, or you sell that asset, in that respective year, the consequence will take place. That is how you practically get the exemption. Important point. So in case of 54F, actually capital gain is not deposited. Up to net consideration can be deposited, because in this case net consideration is important. So this is entire CGAS. Section 1037A, very irrelevant section these days, but you remember there was you come from South India, you understand this thing, that there was a time when we had Andhra Pradesh and Telangana got split out of Andhra Pradesh. Andhra Pradesh had a capital of Hyderabad, which was shifted to Telangana now. So Andhra Pradesh was left with no capital. So at that point of time, I guess Chandrababu Naidu was the CM at that time. Chandrababu Naidu decided that a city at Amravati would be made as capital. Now, if you want to make a city as your capital, a city like Singapore, they want to make a city like Singapore, Amravati as Singapore of India. They wanted to make Amravati. But problem here was कि you want land. If you want to make a city, if you want to develop a city, you want land. So what happened was, there was land acquisition campaign from all the farmers. Whoever were the farmers, whoever were the people in Amravati had to let their land go to government. Government compulsorily acquired their land. Issue involved was, these people have sacrificed their lands. These people were forced to sacrifice their land, and they were charged capital gain. So this section was introduced to benefit these people whose properties have been compulsorily acquired in reconstruction and development of Amravati. Now, think from a farmer's point of view or from landowner's point of view. You are staying in Amravati. You have a piece of land, and that is compulsorily acquired. You have a piece of land, and that is compulsorily acquired. Compulsory acquisition amounts to transfer. Lawmaker says any acquisition shall amount to exempt transfer. If you give away any land in land pooling scheme, this is called land pooling scheme. If you give any land of Amravati to government, then it will be absolutely exempt. Any compulsory acquisition is exempt. Sir, but if if I have given my land, what will I get in return? Lawmaker says government will not pay you any money. Government will give you a certificate, a land pooling ownership certificate, that when a city will be developed, in this case now, when city will be developed, I will be given property in that city. So property taken, land taken, but nothing in return received. Nothing in return received, just a promise that when city will be developed, these landowners will get some properties in the developed city. This was the promise given. Lawmaker says compulsory acquisition is exempt. Any promise received, that is land pooling ownership certificate received, is also exempt. Sir, what if I do? What do I do? This land pooling ownership certificate is of no use. So I might sell this LPOC, land pooling ownership certificate. I might sell this certificate as well. Lawmaker says any sale of this certificate is also exempt. Sir, what if in future I have been allotted piece of land? against this promise. Lawmaker says that the year in which you get the property now, from that end, 2 years, up to 2 years, you can sell this land as well. You can sell this property as well. That will also be exempt. But sir, if you sell it after 2 years, the year in which you have been handed over the property, after 2 years, if you are selling it, lawmaker says that the whatever the stamp duty value of the property is after 2 years, that will act as cost of acquisition for your further sale. So people of Amravati have been exempted in their compulsory acquisition of their land. Okay. Section 1037, last section of exemptions. Lawmaker says that if you are an individual HUF, plus you used your land for 2 years, and your urban agriculture land is compulsorily acquired. Urban agriculture land is compulsorily acquired. What will happen in that case? Sir, compulsory acquisition of urban agriculture land, this will be exempt in your hands. This will be exempt in your hands. Sir, how exempt? Exempt. Okay, it will be exempt. It will be exempt. I'm telling that it will be exempt. Sir, provided compensation has been paid by RBI, but this is a deemed condition. If even if question doesn't mention compensation is paid by RBI, we tended to assume. So this is section 1037. Urban agriculture land used by individual HUF for 2 years. Any compulsory acquisition compensation received will be exempt in your hands. That's it. This is section 1037. 9 exemptions done. It is 8:24. I am giving you break till 8:40. See you guys after the break. Okay. If you have any doubt, mention the word clear. If you have any doubt, mention the doubt. If you have anything to ask, you can ask. If things are clear, mention the word clear and you can go for the break. Hanji friends, welcome back. Are you all back from break? Hello, friends. So I think Section 54B can be misused if planned perfectly. It will save the entire capital gain taxes. Right answer is yes. Rural agriculture land is a gray area. Rural agriculture land can be bought and sold multiple number of times without paying any taxes. For example, you bought a land, for example, worth is 1 crore rupees, but you bought at 20 lakh rupees and paid 80 lakh in cash, and you sold entire land for 1 crore in banking channel. That might save a lot of your taxes. But it's not simple now. Rural agriculture land, whenever you sell, your case might be selected in scrutiny very frequently, and you have to verify, you have to prove these things. So virtually it seems that we can plan our taxes, but of course department knows these areas, and therefore whenever somebody claims 54B, there are higher chances of scrutiny. Before starting the next topic, friends, I want you all to focus on the chart that we have. We did the exemption portion. We started with basics, we did the computation, we did the advanced computation, and we saved the taxes as well. Now we want to actually tax. Till now, whatever you were doing was just a time pass, but now we actually have to plan and save the taxes. In this case, now let's start the tax rates now. Focus on the topic. See, fundamentally, we have four different tax rates. Four different tax rates. If any of the securities fall under 112A, in that case, 12.5% would be taxed at over 1.25 lakh. Securities falling under 111A will have 20% tax rate. Short-term capital gain, other wala will be taxed at slab, and so long-term capital gain would be normally taxed at 12.5%. Basic is this. Let's understand the depth of this topic. What lawmaker says, if you have long-term capital gain under 112A. Now, what is 112A? Understand. If you have three securities, if you have long-term capital gain on list equity shares, long-term capital gain on equity shares, long-term capital gain on equity-oriented mutual funds, units of business trust. These three securities have been mentioned: equity shares, equity-oriented mutual funds, and units of business trust. You have three units where you paid STT on acquisition and transfer. Securities transaction tax have been paid. Now, where securities transaction tax is applicable? When they are listed on recognized stock exchange. So broadly, we call them listed securities, but bare minimum context is you need to pay STT at the time of purchase sale. Okay. Therefore, long-term capital gain shall be taxable at the rate of 12.5% over and above 1.25 lakh of capital gain. So equity shares, equity-oriented mutual funds, units of business trust on which STT have been paid, that capital gain would be taxed at 12.5% over 1.25 lakh. This is the entire capital gain, and this is entire tax rate under 112A. Now, important here is STT should have been paid, and STT contains three important provisions. Listen. Basics is STT has to be paid. There is no limit for exemption vehicle. Under compulsory acquisition, we don't have any limit as to how much property can be compulsorily acquired. There is no limit. Any property acquired will be exempted. Yes, also ULIP was also covered. Let's not discuss that for a minute. Listen, STT has to be paid. That is the important condition. If you want to claim benefit under 112A, STT has to be paid. Listen up. But there are two important areas. First of all, there are three instances where even if you don't pay STT, you will get benefit. There are three areas where even if you don't pay STT, you will get benefit. Whereas there are three areas where even if you pay STT, you don't get benefit. Less relevant, but yes, part of your syllabus, what this provision says. Three areas where even if you don't pay an STT, you will get the benefit. What are those areas? First of all, you acquired securities before 1st October 2004. 1st October 2004, when Manmohan Singh became Prime Minister, at that time, budget was announced by Dr. P. Chidambaram. At that point of time, now, At that point of time, STT was introduced. Before that, if you had bought securities, STT was not even applicable now. So in that case, even if you don't pay at the time of purchase, you will get the benefit. Second thing, you buy securities after the 1st April 2004, on which STT is not even applicable. For example, you buy securities on ESOPs. On ESOPs, you don't pay STT. For example, you buy securities during slump sale. You bought the undertaking and you got a unit, you got the shares free of cost. In that case, again, STT is not paid on this transfer. Third thing, if you buy and sell securities on recognized stock exchange in IFSC, in these three instances, now, even if you don't pay STT, you will get the benefit. What are three cases? STT not paid because STT is not even was in force at that point of time. Second thing, STT not paid because STT is not even applicable in these cases. Third thing, STT not paid because you are buying in recognized stock exchange in IFSC where STT is not applicable. These are three instances where even if you don't pay the STT, the government will give you benefit. But important is, even you pay STT, now you will not get benefit in three cases. What are those three cases? First of all, sir, you buy securities which are not frequently traded. Not frequently traded. You go on stock market, there are hundreds of securities now on which trading does not happen on regular basis. So if you buy not frequently traded, then you will not get this benefit, even if you pay STT. Second thing, 112A is not applicable when you buy securities other than recognized stock exchange. For example, you bought securities at Delhi Stock Exchange or Chennai Stock Exchange or Kolkata Stock Exchange. On these stock markets as well, you have to pay STT. But you don't get benefit of 112A when you buy via Kolkata Stock Exchange, Delhi Stock Exchange, Chennai Stock Exchange. You don't get this. 112A is not applicable when there is a delisting in a company. For example, a company is delisted, and later on company is delisted and relisted. During this intervening period, if you buy securities now, therefore there is something malicious practice happening. Therefore, if you buy during this period, 112A benefit is not given to you on these securities. If you buy after delisting but before relisting, even if you pay STT now, you will not be given benefit of 112A. So three instances where even if you pay STT, you will not get benefit is not frequently traded shares. Second thing, not buying via recognized stock exchange, and third thing, buying securities after delisting and before relisting. These three transactions, if they are done by any QIBs, any investment funds, any SEBI order, NCLT order, any if shares are acquired from government, if they are being acquired by slum sale, or if they have been acquired by FDI guidelines or SEBI regulations, lawmaker says that we will give you exemption. What does this mean? Even you buy securities not from recognized stock exchange, but you are buying because of SEBI guidelines, because of FDI permissions, because you are buying from government, then you will get benefit. Okay? So this is not relevant actually, but that is there, so I told. Not much relevant. Three transaction where even if you don't pay STT, it would be okay. Three transaction where even if you pay, you will not get benefit. But because of court order, if you are buying now, you will get the benefit. That's the bottom line. To be specific, if securities fall under 112A, what benefit you have got? If you sell listed equity shares, listed equity oriented mutual funds, or listed units of businesses, what benefit you have got? Same tax rate is available for normal long-term capital gain as well. Same tax rate is applicable. Same tax rate. Nothing special has been given. Same tax rate is applicable. Only 1.25 lakh benefit is allowed to be extra. There is no extra benefit given. So why are we studying this section separately? Is there any special benefit? Right answer is there is another special benefit given for these securities. If securities fall under 112A, apart from that 1.25 lakh of benefit, another benefit is given, that is the special cost of acquisition. If securities fall under 112A, a special cost of acquisition is allowed on these securities. Units of business trust, equity oriented mutual fund, listed equity shares. A special cost is given. What is the special cost? Lawmaker says we shall take the actual cost or FMV or sales price, whichever is lower compared with the actual cost. We shall take the FMV as on 31st Jan 2018. We shall take the sales price. Whichever is lower, we are going to compare with actual cost, and whichever is higher shall be given to us as cost of acquisition. So ultimately, we are being given a benefit as on 31st Jan 2018. We are being given a benefit of that. What does FMV mean? How do we calculate the FMV as on 31st Jan? That is an important question. Lawmaker says if shares are listed, if units of business trust are listed, if equity or oriented mutual fund are listed as on 31st Jan 2018, lawmaker says take the highest trading price. Highest trading price, not average, not lowest, highest trading price you have to take. And if no trading has been done on 31st Jan, take the highest trading price of the last trading session. The last time whenever trading took place now, take highest trading price on that day. Wow, sir. Wow. Wow. Okay. Sir, but what if shares are not listed? What if mutual funds are not listed on 31st Jan? What if business trust units are not listed on 31st Jan? What you have to do is, sir, you have to, for mutual fund, you have to take the NAV, net asset value, net asset value, NAV of every mutual fund. NAV of every mutual fund has been given on 31st Jan. So you have to take NAV. But what about shares and business trust unit? For them, you have to take cost of acquisition, divide by CII of year of acquisition, multiplied by 272. This will give you index cost of acquisition. This will be ultimately your cost of acquisition. This will be your FMV. Hold on for a minute. We will discuss this point later on. Today only we have to discuss this. Sir, what is an equity oriented mutual fund? Now, this is the area where students make mistake. Listen. What is an equity oriented mutual fund? Listen up. First of all, any mutual fund which invests at least 65% of its proceeds in domestic shares of listed company, listed shares of a domestic company, listed equity shares of domestic company. If I have 100 rupees as a mutual fund, 65% of my money, 65% of my money goes to listed equity shares of domestic company, then I am equity oriented mutual fund. This is half definition of mutual fund, equity oriented mutual fund. There is another leg of it. Focus. For example, if I am a mutual fund, I have 100 rupees. If I invest 65% in shares, listed equity shares of domestic company, then I am equity oriented mutual fund. On the other hand, if I am a mutual fund who has 100 rupees, I do not invest in shares, but I invest in another mutual fund. I invest in another mutual fund. And those mutual fund invest in equity shares, listed equity shares of domestic company. Lawmaker says at least 90% of my money should go to that mutual fund. And that money is mutual funds. Total proceeds, 90% should go to listed equity shares of domestic company. So this would automatically be equity oriented. I would also become equity oriented mutual fund. I directly invest 65% in listed equity shares of domestic company, I will be equity oriented. Therefore, this would be equity oriented for sure. But if I don't invest in stocks, I invest in other mutual fund. If a mutual fund invests in other mutual fund, in that case, such mutual fund should at least invest 90% of its proceeds in a mutual fund, who in turn invests 90% of its proceeds in listed equity shares of domestic company. These two are called equity oriented mutual fund. This will be directly equity oriented, this will be indirectly equity oriented, but yet equity oriented only. Okay? This is about section 112A. Basic provision, not technical at all. Very, very, very simple. Very, very, very simple. We have triple 1A, section triple 1A. We studied three securities: equity shares, equity oriented mutual funds, and units of business trust. If on these securities, if we had long term capital gain, it would be taxed at 12.5% over 1.25 lakh. But on these same securities, if we have short term capital gain, lawmaker says it would be simply taxed at 20%. It would be simply taxed at 20%. Simply, it would be taxed at 20%. Simple thing. Now, if you have other assets on which you have short-term capital gain, long-term capital gain, like gold, like debentures, like debt-oriented mutual funds, like any other property, if you have any other assets on which you have short-term capital gain, it would be taxed at normal rate, slab rate it would be. If other assets you have On that, long-term capital gain would be taxed at 12.5%. 12.5% it would be taxed. Fair enough, simple enough, sir. It's okay. Not difficult, not difficult. To be honest, not that difficult. Okay, reasonable enough. So what did I ultimately tell you? I told you these four things. 112A, 12.5% over 1.25 lakh. 111A, 20%. Other SCC slab and our long-term capital gain 12.5%. This is the basic tax rate. Basic tax rate. Okay? Anybody having any doubt up to this point? Anybody having any doubt, you can ask. I want you all to focus for next 15-20 minutes. I want you all to understand a concept which is not technical, but students really face difficulty in those topics. So I personally want you all to focus on this. Okay. Concept of indexation. In historic times, not today, but in historic times, there was a concept called indexation, which said if you had any long term capital asset and you compute capital gain on those assets, then cost of acquisition shall be taken as indexed cost of acquisition. Index cost of acquisition. Cost of improvement would be taken as indexed cost of improvement. Oh, there was in historic times, maybe in prehistoric times, there was a provision that if you have long term capital assets, then in that case, when you would be computing capital gain, a cost of acquisition would be taken as index cost of acquisition. Cost of improvement would be taken as index cost of improvement. Okay? This was uh, prehistoric times. Prehistoric times before human civilization came into picture. This was for computation of capital gain. Computation of capital gain. How we used to do that in prehistoric times, not today, but prehistoric times. How we used to do? We used to take full value of consideration. We used to take transfer expenses. This would give us net consideration. Whatever cost of acquisition we used to have, we used to divide it with CII of year of acquisition multiplied by CII of year of transfer. What is the CII? See, CII is nothing but cost of inflation index. First, for example, if you used to buy लक्ष्मी नारायण शर्मा सर आपकी रिवीजन प्लेलिस्ट नहीं बनी हुई है in individual video search taking time. I'll make there is a revision playlist. I'll make time. May 26 search make 26 revision videos. There is a playlist. There is a playlist. Find a search that you will get that. Okay. Now, what is the CII of year of acquisition or CII of year of transfer? Understand this. What does this imply? For example, if asset was purchased in 2001 and its value was 100, and as of now, if you sell that, it would be 376. So every year there was some inflation happening now. Every year there was some inflation happening. Therefore, as of now, we can value that asset as 376. So, for example, if asset was bought for 10 lakh rupees at that time, CII was 100. As of now, we might value it at 376. So we might index it. Okay, we might index it. So that is how we used to index the cost of acquisition. Similarly, we used to index the cost of improvement, CII of transfer, divided by CII of year of acquisition. Okay, this is how we used to do. This used to happen in prehistoric area. Prehistoric. What was that prehistoric time? Lawmaker says if asset transferred before 23rd July 2024. If asset has been transferred before 23rd July 2024, this was done. This was done. Not today. Not today. Absolutely not today. Absolutely not today. Sir, what happens after 23rd July? What happens after 23rd July 2024? Simple thing. Same provision. Full value of consideration shall be taken as it is. Transfer expenses shall be taken as it is. Net consideration shall arrive. Instead of index cost of acquisition, we will take cost of acquisition. Instead of cost of improvement, we shall take cost of improvement. We should simply reduce them one by one, and this will give us the capital gain. That's it. This is how we used to do. This is how we do with effect from 23rd July 2024. Or I should say, if transfer done. This is how we do right now. As of now, previous year 25-26 is going on, so we do it this way. Sir, fair enough. Fair enough. But section 112 says differently. Section 112 says differently. If, any long-term capital gain other than assets under section 112A shall be taxed at 12.5%. This is the basic 112. But there is a proviso to this. Any individual or HUF transfers immovable property acquired prior to 1st April 2020, sorry, 1st April, nahi, acquired before 23rd July 2024, transferred after 23rd July 2024, sustains long-term capital gain, then tax calculation, any individual HF being resident, okay? Being resident. Tax calculation shall be lower of 12.5% of capital gain or 20% of capital gain computed with indexation. How we will put this format into picture, understand, huh? How do we do this? Full value of consideration shall be taken as it is. Minus transfer expenses will be done as it is. This will give us capital gain. This will give us the net consideration. Huh? Minus we would do cost of acquisition as it is. Minus we would do cost of improvement as it is. This will give us the capital gain. Now when we will calculate tax rate for this now, tax will be calculated capital gain into 12.5%. This is first one. Capital gain recomputed with indexation, which means again full value of consideration minus transfer expenses is equal to net consideration minus index cost of acquisition minus index cost of improvement. This will give us the capital gain now amount into 20%, and this will be the second tax rate. Whichever is lower will be reduced. Whichever is lower will be payable. This will be payable. This will be payable. Understand what I'm trying to say is, I told you one concept, that is indexation. Indexation may apply to do two things. Indexation may apply to computation as well. Sometimes indexation may apply to computation as well when you are computing capital gain. But in those cases when transfer has taken place before 23rd July 2024, if transfer has taken before 23rd July 2024, then your cost of acquisition might be indexed for computational purposes. Your cost of improvement might be indexed for computational purposes. It is possible that you might have to index it. It is possible. But understand, but after, if you transfer 23rd July, after 23rd July, you are transferring now, your cost of acquisition will never be indexed for computation purpose. Never ever it will be indexed. But you might have an option to pay taxes under 112 with indexation. Here we are indexing not for the purpose of computation, here we are indexing for the purpose of tax computation. Understand, if asset is transferred before 23rd July, then cost of acquisition has to be indexed for computation purpose. Cost of improvement has to be indexed for computation purpose. Your capital gain would reduce. But if asset is transferred after 23rd July, never ever index it for computational purpose. Only for tax calculation purpose indexation is being done. Only for tax calculation purpose indexation is done. Are you understanding how basics is, what basic concept is? We are going to solve multiple questions with respect to this. But just tell me, did you understand the basics or not? Did you understand the basics or not? So let us understand. Okay? If I ask you to draw the diagram, listen. If I simply say asset transferred before 23rd July 2024, how provision would take place? Full value of consideration minus transfer expenses minus, this will give us net consideration minus cost of acquisition divided by CII into CII. This will be index cost of acquisition minus index cost of improvement divided by CII into CII. Actually, it will be index cost of acquisition is nothing but after dividing CII. This will be index cost of improvement. This will be capital gain. Earlier on this, capital gain tax rate was 20%. But with effect from 23rd July 2024, how the answer would change? Full value of consideration, transfer expenses, net consideration. Now here you don't have to do indexation, only cost of acquisition to be reduced. Cost of improvement is to be reduced. Capital gain would be this. By default, this capital gain would be 12.5% tax. But sir, if you are an individual HUF, in case of immovable property transferred after 23rd July, you have long-term capital gain. The capital gain, tax calculation will be lower of 2. Tax calculation will be capital gain into 12.5% or capital gain recomputed into 20%. How recomputation will take place? With indexation you have to do. This is how you have to do. Is it clear to everybody who is sitting here? Everybody. Anybody having any doubt, you can ask, because this is the area where many students face difficulty. I don't know why, but many students really face difficulty in these areas. Okay. Let me take an example. Try participating on this question. You should answer. The more you answer, it would be beneficial. On 1st April 2008, 2002, Kavi bought a house for 20 lakh. 1st April 2025, she sold house for 1 crore. Compute capital gain and tax. CII, I am giving you 2023 is 100, 105, and 25, 26 is 376. Solve this question. Sir, what you are asking? Hare Baba, I have multiple questions planned for you now. Let me see how basics you how clear with you are basics. How clear you are with your basics. Solve this question. I'll give you multiple examples. I have 3 questions planned for you. Let me take my time now. Let me see. Just tell me, I'm giving you 2 minutes to solve. Sir, asset has been transferred. Asset has been transferred after 23rd July 2024. That is 1st April. How capital gain would be computed? Full value of consideration will be 1 crore. Cost of acquisition would be 20 lakh rupees. So your capital gain would be 80 lakhs only. Capital gain is going to be 80 lakh only. Capital gain is going to be 80 lakh only. Tax calculation will be done in 2 manners. Capital gain into 12.5%, which is equals to 80 lakh into 12.5%. 10 lakh. Or capital gain recomputed with indexation, which will be capital gain recomputed with indexation into 20%, which means full value of consideration. This is a working note, huh? Full value of consideration 1 crore minus cost of acquisition divided cost of acquisition will be 100, sorry, 20 lakh divided by 105 into 376. This is 71.62. Capital gain recomputed is 28.38 into 20%. So either tax is to be 10 lakh or 20%, that is 5.68 lakh, whichever is lower. Your tax will be applicable 5.68 lakh. Tax will be 5.68 lakh. In addition to that, sir, you will be charged surcharge as well. How much surcharge would be applicable? So surcharge would be applicable based on income. Income is more than 50 lakh rupees. So here surcharge would be applicable on this 10% as well. Plus 4% education cess would be added. So into 1.1 into 1.04, our final tax liability would turn out to be 6,49,356. This will be our final tax liability. Did you understand the concept? How did we approach it? We always have to make sure when did the transfer take place. If transfer took place after 23rd July 2024, which is going to happen in your case, transfer for previous year 2026 is always going to take place in 2026 only. So for computational purposes, you don't have to do the indexation. For computational purpose, you never have to do indexation. You might never do indexation. But sir, for tax calculation, you understood you have to do indexation directly multiplied by 12.5% or compute it with indexation into 20%. This is you have to do whichever is lower. Got it? Those who gave incorrect answers, did you understand as to how do we proceed with it? If you are clear, if things are clear, I have multiple good questions planned for you. Ignored surcharge is absolutely different thing. Your capital gain computed was wrong in previous answer. Just tell me, did you understand how do we approach the question? Let's do a competition. Let's do a competition. We have with us Deepak. Deepak, in the information of Deepak has been given to us. He acquired a land in 1990 for 15 lakh rupees. Okay. Whose FMV as on 1st April 2001 is 35 lakh rupees, but stamp duty value is 30 lakh only. Stamp duty value is 30 lakh only. He has certain advance money being forfeited. He has forfeited advance money as well on 1st April 2026. And forfeiture amount is 2 lakh rupees. Okay. In 2009, he constructed the house. There was a land. He constructed the house in 2009 for 40 lakh rupees. Okay. He sold the entire house for 4 crore rupees by paying 2% transaction charges and bought another house within 1 year for 1 crore rupees. Compute the capital gain amount and compute the taxes. I'm giving you 7 minutes to solve this question. It is 9:19 right now. I'm giving you time till 9:26. Let's see how many of you correct this. You said you understood the concept. You have to answer. Let's see who gets this. If somebody who is not trying, I cannot say how harsh you are being on yourself. You cannot do anything wrong than this if you are not even trying. You will not give this privilege. You will not get this privilege again to get time for trial. You will never get. Nobody gives this much time to try. Okay, in these power batches, you have less time, but still, I somehow managed to give you time. Please utilize it. Please utilize it. Please try solving it of your own. You might do wrong now. I will correct it. But unless you try, you will never understand what mistakes you made and what corrections you have to do. For your reference, this CII index rate has been here. I can guarantee if you find this question difficult, now when I'll solve it, you'll think, yeah, this was nothing. There was nothing in this question. You'll say that. Getting answer? See, somebody who is thinking now, thinking about this, I'm just telling you, these are the areas which are weak for you. The more early you will realize now, the more early you will get the privilege to understand these things. Somebody who is thinking that I am very strong with concepts, but I'm not able to score marks, this is the area. These are the areas which are lacking in students' mind. Okay? Let's try doing it. Let's try doing it. Okay? How to think? How to think when you see a question of capital gain? Always draw the format. Full value of consideration minus transfer expenses. This will give us the net consideration minus cost of acquisition minus cost of improvement. This will give us the capital gain minus exemption. This will give us the taxable capital gain. Very nice, Gokul. Very, very, very nice. Very nice, Deepak. Very nice. Beautiful. Two people, two answers. Beautiful. Two people, two answers. Okay. On this, 12.5% or computed with indexation. Meanwhile, other people can also try answering. This is the format. Always draw the format. I'm telling you now, the format is the best thing that can help you. Okay? First of all, you need full value of consideration in this entire process. At what, how many transfer took place? Sir, only one time you sold the property, and you sold it for 4 crore rupees by paying 2% transaction charges. So 4 crore means simply 400 lakh. 2% transaction charges, which imply 8 lakh rupees. So net consideration is 392 lakh. This is the net consideration. This is the net consideration. We incorporated this figure. What was our cost of acquisition? Very nice, Krishna. Very nice. But three people, three answers. And even not even long capital gain is also not matching. Deepak, again, different answer. So three people, four answers. Sir, what is the cost of acquisition? Try understand. Now let me solve it. Let's see who has given the correct answer. What is the cost of acquisition? Sir, cost of acquisition is price paid to acquire the asset. Basics is that is 15 lakh will be cost. But I have told you, if asset is very old, we shall take the FMV. So FMV shall be taken. But FMV cannot exceed SDV. So our cost of acquisition will be 30 lakh rupees. But sir, advance money has been forfeited, and this forfeiture took place before Modi government coming into picture. So this shall also be reduced. So cost of acquisition will be actually 30 lakh minus 2 lakh. So cost of acquisition will be 28 lakh in this case. I gave impact of all the three. House constructed is nothing but improvement. Improvement we shall take 40 lakh. And this will give us the capital gain. 392 minus 28 minus 40. Now this was 324. Now it is very, I mean, obvious or unobvious, I don't know. But I had land, I had constructed house. So I have a house property. I'm assuming this is residential house property. When I sell it, I will get 54 exemption, not 54F. It will be 54 exemption. So exemption would be 1 crore. So 224 lakh will be the net capital gain. Lokesh gave the same answer. This is the correct answer for capital gain. This will be correct capital gain. How taxes are calculated? Directly pay 12.5% of this. 224 into 12.5%. 28 lakh will be the first answer. Capital gain recomputed with indexation. Again, recomputation is to be done. How recomputation is done? Listen carefully. I am drawing a box, but this will be a working note. Sir, full value of consideration is to be taken again. 400 lakh. Minus transfer expenses 8 lakh. Net consideration is 392. Cost of acquisition is 28 lakh rupees. We have to divide it by 100 because it was FMV as on 1st April. So we have to divide it by 100 into CII of current year. 28 divided by 100 into 376. So 105.28. This will be index cost of acquisition. We have to take index cost of improvement as well. 40 lakh was the improvement. Sir, CII of year of construction. So 2009-10. 148 we shall take into 376. So our index cost of improvement is 101.62. Our capital gain would amount to 185.09. On this, exemption would be given to us 100 lakh. 85.09 would be capital gain computed with indexation. On this, they will be charged 20% taxes. So we'll have 37.0196 percentage, sorry, 0196 lakh. This will be the entire capital gain taxes. 37. Did I do some mistake? 85.09 into 20%. Oops, wait. 85.09 to 20%. Sorry. My bad. I wrote something wrong. Here 17.016%, 016 lakh. ठीक है, 5.01 into 20%, 17.016 lakh. 17.018 lakh actually it is. It's not indifferent. I want to tell you the process, because if we solve in rupees, we will get the correct answer. Now, whichever is lower, we have to take. Our tax would turn out to be 17.018 lakh. Now here we have to add surcharge as well. Now how much surcharge would be added? See, compute capital gain based on total income. We have to calculate the surcharge. Our total income is more than 2 crore, but maximum surcharge on immovable property can be 15%. So surcharge 15% would be added. 4% education cess would be added. So into 1.15 into 1.04. 20 lakh, 35,000, 35, 28. Ultimately, this is the answer. This is the final tax liability. Not even close. Anybody, not even close. Huh. Did you understand how to think in these type of questions? Did you understand how do we think in these type of questions? Want to solve one more question? Want to solve one more question? If you all say, I have one more beautiful question to share with you all. If you understood, just tell me clear. If you have any doubt, you can ask doubt right now, because next question is to be a brainstormer. Okay. Sir, which step we did? How did you do this step? We didn't understand. If you have any doubt, now ask. If you have any doubt, now ask. If you want me to repeat things, I can repeat things for you. See, bottom line is this only. For computation of capital gain, you are never going to index if transfer took place after 23rd July. You are never going to index. But sir, for tax computation, you might have to index. For that matter, you have to again compute. Okay? It is bought in 2026. See, if a reading mistake has been done, I feel pardon. I feel sorry because of my reading. If typing mistake or writing mistake, you did mistake, then I am really sorry. If your other steps were okay, very done, very well done. But otherwise, if other than that you had some other mistakes being done, then your answer was wrong. Otherwise, if this because of this your answer was wrong, you will get marks in exam. Okay. This is how we solve the question. Another question, shall we try? Another question. Let me try it. Okay. Now this is a question. Now, I had to think for hours. To make this question. Let me tell what this question is about. Take care. Okay. Got it. Now, what the question is? I had to think for this question actually. What this question is? Is it ever asked? I don't know. I personally don't know. We had Anna Malai. In our case, it's not Anna Malai type. It would be wrong. Let's assume Gokul. ठीक है? What the case is, understand. Huh? Mrs. Gokul. Understand. Very well understand. This is Mrs. Gokul. Mrs. Gokul bought a piece of land in 1990s, acquired for 20 lakh rupees. ठीक है? In 1995, she did some improvement of 15 lakh rupees. On 1st April 2001, fair market value of the entire property was 40 lakh. Stamp duty value was 42 lakh. We might ignore SDV because FMV is okay. 2004, Mrs. Gokul did some improvement of 10 lakh rupees. 2005, Mrs. Gokul received some advance money which she forfeited later on. And it was 1st April 2006 when she gifted this property to Mr. Gokul. She gifted the property to her husband, Mr. Gokul. 1st April 2008, Mr. Gokul also did the improvement. Mr. Gokul also did the improvement. Amount 15 lakh. In 2009, again Mr. Gokul forfeited the advance money forfeiture. In 2018, again, Mr. Gokul forfeited advance money of 50,000 rupees. In 2025, there was agreement to sell the property for 3 crore rupees. Stamp duty value was 3 crore rupees, but no money has been received. Whereas on the date of registration, that is on 1st October 2025, when registration was done, SDV was 3.5 lakh, 3.5 crore, but money received was 3 crore only. So it's agreement versus registration rate. You have to take a call. On 1st November, that means within a month, Mr. Gokul bought 30 lakh rupees of NHAI bonds. On 1st April 2026, new house was bought for 60 lakh rupees. Calculate the amount of capital gain and calculate the capital gain amount and tax. I'll give you 10 minutes to solve. It's 9:38. I'm giving you 9:40. Sorry, 48. 47. If you are dicey about any figure, sir, what does that figure is? If you are dicey that what the person is, if you are not able to understand any of my handwriting, just ask. Okay? Try doing this question. This question will clear out multiple concepts that are there in your brain, multiple concepts. And honestly, personally speaking, I am not committed to show these types of depth in this batch. But I am showing this depth because you have been perceiving things well. Okay? This is last attempt. I cannot miss anything out. Therefore, I am giving my 100% to every concept that might come your way. You have to be committed on day one. You have promised me. Try doing it. See, once you are clear with computation, no, tax calculation isn't a bigger deal. And how do you compute computation? Stick to the format. Stick to the format. Always stick to the format. The more you'll stuck to the format, now stick to the format, the easier it would be for you to calculate the taxes, including capital gain. Time is passing. Are you able to solve it? Are you able to process the question? Indexation chart. How can I show? How can I show? I can. Everybody is messaging out together. Wow, 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 wow. I'm just writing indexation down in with blue pen. You can check it out. CII for 2004-5 is X 113. CII for 910, sorry, 8-9 is 137. CII for this current year is 376. And for 2001-2 is 100. I am writing CIA. Okay? How can I show indexation chart in the same question? Difficult. Last 1 minute and I'll start. Okay? 10 minutes are sufficient for this question. You don't have to even write it down. You just have to scribble it down and solve the answer. I think 10 minutes are sufficient because if this question comes, it would be for 6 marks. For 6 marks, more than 10 minutes, I don't think you will have. See, if somebody is not trying, I am again saying you cannot be more harsher to you than this. Entire batch will be worthless if you are not trying even. I'm saying if you have not enrolled, do not even consider enrolling if you are not even trying or not willing to try. Gokul gave the answer. At the same time, Deepak also gave the answer. And both answers are not even related. Bilkul, not even close to each other. One is the North Pole and the other is South Pole. Wow. Wow, wow, wow. Very nice. Very, very, very nice. Chalo, let me start. Let me tell how do I solve. Okay? Let me try. See, always I have a habit of always for Acha. Krishna also gave the answer, which is also not matching. I mean, all the three people, three different answers. Other people would give, it will also be the different. Okay? There are multiple areas of mistake in this question. Always draw the format before you understand the solution. Very nice, Vetri. Very nice, Kavi. Now we have six answers, and all six are different. No two answers are matching. You all can see your comments, and no two answers are matching. अच्छा, there is an मतलब in Hindi na there is a saying that बटोगे तो कटोगे. The more you will be divided, the more happy I'll be. You know, the more you are divided, the more happy I'll be because I'll have a scope for correcting you. ठीक है? So the diverse answer I get, I always become happy because I have something to add on. Na? Now, this is the format. Now, first of all, I need to calculate the capital gain. Before calculating capital gain, I need to see how many transfers are happening and in whose hand transfers are happening. Mrs. Gokul bought the house, but she gifted this house to Mrs. Gokul, Mr. Gokul. Gokul. Now Gokul is the owner, and Gokul is ultimately selling the house on 1st October 2025. Therefore, capital gain will be calculated in the hands of Mr. Gokul. And previous year would be 25-26. What would be his cost of what would be his full value of consideration? Let's see. At what price he is selling. Agreement to sell took place on 3rd October. Agreement to sell was for 3 crore rupees. SDV was also 3 crore. But when registration came, money received is 3 crore, but SDV has turned on 3.5 crore. Sir, which SDV we are going to take? We are going to take the SDV on registration. Agreement date SDV is irrelevant. Absolutely irrelevant. Absolutely irrelevant. So full value of consideration is 3.5 crore. For just for a reference, we don't have transfer expenses right now, so 350 lakh will be our net consideration. Just for your reference, I am telling, okay, somebody who doesn't remember things, just note it down. For example, if question would have mentioned that transfer charges are paid. Transfer charges are paid at the rate of 1%. Sorry, brokerage is paid 1%. Now, how will you calculate brokerage? Is this brokerage going to be on SDV on price paid? Sir, brokerage is always going to be on price paid. Remember, transaction charges are always on the money received, money paid. You are paying broker. Whatever money you paid to the broker is the percentage of the consideration, not SDV. So it is possible that 1% might be as brokerage. 1% will not be of 350. It will be of 300 only. So brokerage can be a issue, can be a mistake. Okay? I have not incorporated that thing in the question because it would create more difficulty in the question. Okay? I might have given 1% brokerage as well, which would entirely change the answer. Now, I incorporated this segment. Registration SDV I took. I incorporated agreement segment as well. Now I want cost of acquisition. Now what is the cost of acquisition? Sir, for Mr. Gokul there is zero cost because he has got house free of cost. Mr. Gokul has got house free of cost. But sir, we have already studied that whenever free of cost asset is received, cost of acquisition of the previous owner is taken. Cost of acquisition of previous owner is taken and previous owner is Mrs. Gokul and Mrs. Gokul's cost of acquisition is 20 lakh. But do we ever take cost of acquisition before 1st April? No. Do we ever take improvement? No. We take FMV as on 1st April. So cost of acquisition improvement is 35 lakh. FMV is 40 lakh. So we shall take higher 40 lakh shall be taken. There is a condition that if SDV is there, now we have to consider that SDV as well. But SDV is higher now. Our FMV is already lower. If FMV exceeds SDV, then FMV can be maximum SDV. Here in this case, our FMV shall become cost of acquisition. So we shall take cost of acquisition as 40 lakh. Mrs. Gokul has also done the improvement as well. Mrs. Gokul has done the improvement as well. So we shall take that improvement as well. We shall take improvement as well. How much improvement? 10 lakh. We shall take improvement. So I incorporated this segment as well, this as well, this as well, this as well. Advance money has been forfeited by Mrs. Gokul. Do we have to subtract this advance money forfeited by the previous owner? Do we have to subtract this advance money forfeited by the previous owner? Personally speaking, no. Advance money forfeited by the current owner is always reduced. So this has nothing to do with the our this has nothing to do with our question. Then this property was gifted to husband. Husband also did the improvement, so improvement would increase by 15 lakh. Perfect. In 2009, again advance money was forfeited. 1 lakh is the advance money forfeited by the husband. This shall be reduced from cost of acquisition because husband has also forfeited the advance money. So 1 lakh shall be reduced. 39 lakh would become our cost of acquisition. Advance money forfeiture is also considered. Now, advance money forfeited in 2018 is not to be considered because it is taxable under IFRS. Advance money forfeited in 2018 is not considered because it is taxable under IFRS, so this has to be ignored. Now, can I say for computational purpose, I have taken every point? Am I missing out any point? I personally think I'm not missing out any point. I considered every point. So full value of concession I took. Transfer expenses, there were not any. Cost of acquisition was of the previous owner, but I reduced advance money forfeited by me, not by the previous owner. And cost of improvement, I took both one. So this is 25 lakh. Our capital gain would turn out to be 350 minus 39 minus 25. Our capital gain is 286. Our capital gain is 286. How much is the exemption we have got? Sir, 60 lakh is the new house, 30 lakh is the NHA bond, so 90 lakh. 54 is 60 lakh. 54 EC, 30 lakh. 90 lakh is the exemption amount. Our capital gain is 196. What mistakes people have done? Let's see how many of you have got this capital gain correct. How many of you have got this capital gain correct? Let's see. Gokul, something went wrong. Deepak gave correct capital gain. That's first right answer we have got. Vetri also gave the correct capital gain. Two people have given correct capital gain. Let's see out of these two people, anybody got the correct tax or not. Up to this point, anybody having any doubt, just mention in the comment box. I am trying to solve the taxes. Okay? Now, how do we calculate taxes? Sir, first of all, first option is directly 196 lakh into 12.5%. That is the first option. 196 into 12.5%. That's the first option. 24.5 lakh. This is the first taxes. Mistake of 50,000. This mistake can be one of the area. This mistake, this advance money forfeiture, people might forget. Okay? Second step, capital gain recomputed with indexation. Oh, baapre, recomputed with indexation into 20%. Let's see how capital gain will be recomputed. Full value of consideration will be 3.5 crore. Yeah, 350 lakh, easier to do. Minus directly I'm doing index cost of acquisition because we don't have transfer expenses. 39 lakh divided by year of acquisition for the wife. Wife was 100 multiplied by 376. So index cost of acquisition. Sir, from where I am indexing? Listen, Gokul acquired property in 2006, but since he got it free of cost, so indexation would be done from his wife. So I am indexing from her wife. Okay? I will discuss this point of indexation tomorrow. 39 divided by 100 into 376. 146.64. Index cost of improvement. Now we have two improvements. First improvement was done by wife in 2004, which was 10 lakh divided by 113 into 376. This is 33.27. And second improvement was done by Gokul himself. First improvement was done by wife. Second improvement was done by Gokul. 137. 2008. Okay, 137. Any other improvement? No, no improvement. 41.17. 350 minus 146.64 minus 33.27 minus 41.17. Our capital gain would turn out to be 128.92. Computed with indexation. Let me cross check. 350 minus 146.64 minus 33.27 minus 41.17. 128.92 minus we have to do exemptions. Sir, we have two exemptions. 54 you see 90 lakh will be the exemption amount. So our capital gain recomputed with indexation is 38.92. 38.92 we have to take into 20%. This will be 7.784 lakh of this will be 7.784 lakh of final capital gain. Whichever is lower we have to take, so taxes will be 7.784. Add surcharge. If you have any immovable property, how much surcharge would be applicable? Lawmaker says income exceeding 1 crore up to 2 crore, 15% surcharge is to be added at the rate of 15%, plus 4% of education says our final tax liability into 1.15 into 1.04. So it will be 930,9664. This will be final tax liability. Let's see who was close. Very beautiful. Krishna gave right answers. We had two correct answers. One was Vetri and second was Deepak. Let's see which of the two have given the right answer initially. Deepak, capital gain was correct, but answer was wrong. Vetri, capital gain was correct and answer was again wrong. Both the people had given wrong answers, but yes, capital gain computation was wrong on correct on your part. That is appreciable thing. Okay. Now tell me, did you understand the entire concept? Entire concept holistically and done with examples as well holistically? Did you understand? For computation, we never do indexation if asset is transferred after 23rd July. But for tax calculation, we might index if you are an individual HUF and you are transferring after 23rd July. How we do that? We took three examples. Yes, sir, we got it. I gave before HEC. Then if it is correct, then well, I did mistake in advance money from reducing cost of acquisition. Koi baat nahi, no issue, Vetri. Yes, sir, yes, sir, yes, sir. This is how we solve the questions. Okay. I want to clear some basics as well here. What did we study in this entire topic? Did we do time pass, sir? There was no time pass. There were multiple things to be understood in this concept. If asset is transferred before 23rd July 2024, then cost of acquisition might have to be indexed for computation purpose. But if asset is transferred after 23rd July, you never have to index for computation purpose. You might have to index for tax calculation purpose, but not for computation purpose. Sir, we got that. I gave correct answer before. What was your correct answer? 9.3. Capital gain was wrong. Acha, capital gain was correct. Very nice then. Lokesh, very nice. Lokesh gave right answer. Capital gain was wrong, I guess, but yes. So capital gain not given. Tax was given. Very nice. Very, very nice. Lokesh has given right answer for tax calculation. I did not think that. I saw capital gain as 38.92. I did not consider that you are giving after indexation, but very well done. Okay. Very well done. Okay. A star badge from my side. Star of the day. Now listen, what my point is. Take it. Indexation is a very, very delicate issue. If asset is transferred before 23rd July now, you might never have to do indexation. Listen very carefully. You might never do indexation if asset is transferred before 23rd July. But if asset is transferred after 23rd July, if asset is transferred before 23rd July, you have to index cost of acquisition, you have to index cost of improvement. If asset is transferred after 23rd July, you never have to do indexation for computation, but you might index for tax calculation. That is the entire theme of the topic. Sir, why are you emphasizing transfer before 23rd July? Answer is, it is possible for your case that transfer may take place before 23rd July. In those cases, you might have to index cost of acquisition as well. There is possibility. There are instances where transfer may take place before 23rd July and you have to index those as well. There is a possibility. There is a possibility that transfer takes place before 23rd July. Sir, what are those cases? There are basically 5 to 6 cases. Basically, there are 5 to 6 cases. What are those 5 to 6 cases? First of all, there is a concept of section 45(1). 45(1) talks about any gain arising from transfer of capital asset shall be taxable under that capital gain in the year in which transfer took place. So, section 45(1) clearly states shall be taxable under head capital gain in year in which transfer took place. Sir, charging section clearly states that capital gain will be taxable in the year in which you undertook the transfer. But this is not the always case. There are 4 exceptions to this. First of all is destruction of capital asset. It is possible that your asset is destroyed in 2021, but you received a compensation today. So at the time of destruction, there cannot be any taxation now, because at the time of destruction, if you cannot be charged taxes. At the time of destruction, when you receive money, then only the government can tax you. So it is possible that destruction might take place before, and you will be charged to taxes today. It is possible, and that is also possible that destruction took place before 23rd July. So indexation might be done in that case. Indexation might be done in that case. In cost of acquisition computation as well, because if transfer is before 20th July, you might have to do indexation. It is possible for conversion of capital asset into stock in trade. It is possible that we had converted our capital asset into stock in trade before 23rd July. Transfer took place before 23rd July. Computation done before 23rd July. Now we are selling that stock in trade, so tax is being charged. Again, indexation might be done in this case. Third case. Sir, हो सकता है, it is possible that compulsory acquisition of property took place. It is possible that our property was compulsorily acquired before 20th July 2024 and money has been received today. In that case, again, tax would be charged in our hands in today. But even though we have transferred it before 20th July, indexation might be done in cost of acquisition. Fourth thing, joint development agreement. In this case as well, transfer took place. Transfer might be taking place before 23rd July 2024, but tax would be charged today. Tax might be charged today. Why tax would be charged today? Because money is received today, property is received today, completion certificate is received today. So, entire point of indexation is any asset transferred before 23rd July, cost of acquisition will be indexed for computation purpose. After 23rd July, cost of acquisition will never ever be indexed. But tax calculation wise, you might have to index it for tax calculation purpose. So, sir, are there any chances that our question might be asking us transfer before 23rd July 2024? It is possible in these 4 cases that is possible that transfer might be before 23rd July 2024. It is possible. It is possible. It is possible. How is it possible? When to do? We shall do it tomorrow. If you don't have time, just confirm me. Can you sit for or more longer, or you have to go to office? You have to go somewhere. Then in that case, we might do it tomorrow. Sir, tomorrow. Well said, sir. Well said. Can sit. Oh, ho, ho. Even if few people say they can't sit, I cannot force anybody to sit, to be honest. Try solving question number 7, Mr. Sanjay. Question number 7 of Super 150, Mr. Sanjay. Question is from capital gain. You can also solve one more question. I'm not saying this to be written, but try doing this question as well. Mr. Singh, question number 5. Question number 5 can also be done, Mr. Singh, but this is not a DPQ, huh? This is not a DPQ. You might practice it, but don't write it. I will write it tomorrow. I will tell you how to solve this question tomorrow. But as of now, just focus on this area, huh? As of now, just focus on this area. Important is, uh, important is you just need to solve this question by writing. This question can be done by scribbling. Sir, please share Super 150. It has already been shared on your Telegram channel. Somebody who already has received might share it to you all. That's all from my side today. You all have been wonderful, wonderful, wonderful students today. One more thing, one to two things I need to share. Okay. First of all, if you have any doubt, please feel free to ask me on my Telegram channel, Telegram number, Telegram group, wherever you are comfortable. You might ask doubts, because once we are done with the chapter, it will be difficult for you to comprehend entire capital gain. Okay. This is a power batch. We have to complete chapters on faster basis. Most probably tomorrow we'll be done with entire capital gain. We'll be done. Day after tomorrow we'll be done with entire IFOS. Okay, so you have to be faster in that sense. So do ask doubts if you have. Second thing, if you have not enrolled, consider enrolling as soon as possible. But because day after tomorrow we'll have lecture number 6 we'll have on app, so access can be granted to you as soon as possible, you without you missing any class. Okay, that's important thing. Third thing, if you have somebody who want to study, who has any doubt now, can definitely you can suggest him first 3 lectures. These are on YouTube, so that they can also understand how do we study. I personally think you must have got comfortable by now with the teaching pattern that we follow. We really go slow. We really take multiple examples. We really solve a lot of question. Apart from that, I always tell we'll be able to complete things on time as well. Tomorrow we'll be done with capital gain. This is really fast. 3 days capital gain, very, very fast it is. But yet we managed to cover everything without missing out on anything. We'll also solve 10 to 12 questions that are there in Super 150. That also we'll solve. So if you have somebody who is looking for classes, you can suggest these classes to them as well. Okay. And at last, a final request for you all. If you really liked the first 3 lectures, I would suggest you to go to lecture number 1 and drop a comment of relating to your experience, because based on your experience, people draw inferences as to whether they have to go for these classes or not. Sometimes your comment really matter a lot. Your comment can help somebody deciding whether he should go for classes or not. So I would request you with both hands joined together that if you, whatever your experience is, if it is positive, do mention that in comment box. If it has not been that great up to the mark, you can mention that thing as well, so that because of your experience, people can draw inferences. If you want to wait for some more lectures to make up your decision, that's also up to you. But do share your experience in comment box in lecture number 1, because that is where students acknowledge, student understand, student take away your experience. Okay, you all have been wonderful students. Ebooks have been uploaded on Fast app. If not, then message me out. I'll talk to team so that they can provide you access of ebooks as well. Apart from that, Super 150 has already been shared on my on our batch specific Telegram group. Okay. Somebody who has not joined it, maybe because you have not enrolled for it. If you will enroll it now, you will get the access to Fast app as well. Bye bye. Have a great day. You all have been wonderful students, and I am really enjoying teaching in English. I don't know how much you are comfortable with my English, but I am very comfortable teaching you all because you all are actually studying well. So let's hope that this energy continues tomorrow as well. Have a great day. Do recall what we have studied. Tomorrow we shall continue further. Bye bye. Love you all. Have a great time.